Oh, come on. I forgot to hit live. I was talking about stocks this whole time. I got sidetracked a little bit. No, it's all good. Let's get started again. Let's get started. I got sidetracked. I forgot to hit live. Oopsie daisies. How's everyone doing? How's everyone doing? Welcome, welcome, welcome. Thank you, Dieter, for letting me know. Good thing I read the chat today this time. Unlike last time where I didn't go live until 30 minutes into the stream where I just kept talking to myself for 30 minutes. Thankfully, today was only 5 minutes. No, Bookmap, it wasn't your fault. It wasn't your fault at all. I was kind of playing with the settings there. I thought I hit go live. I was talking for 5 minutes or so, but clearly I did not hit go live. How's everyone doing? Welcome. I was mentioning a couple changes to the show over here, so why don't I kind of start the whole thing over? Welcome, welcome, welcome everybody to another episode with your boy TraderPrad, but we're gonna kind of change up the name for this one. We're gonna go with something new, something that I came up with today while I'm making a thumbnail. If you saw the thumbnail in the bottom left corner a little bit, you saw something that said the after hours show. So basically what we do over here, we wait for the after hours session, which ends at 8 o'clock, and then we cover the market, all the movers such as the earnings or any new space tickers. We look for plays on them. So this is basically like the late night show, but for the stock market. So it's after the after hours with your boy TraderPrad. We're gonna see if that name can catch some traction, some momentum, some juice behind it, and see if we can roll with that one over there. So after the after hours show with your boy TraderPrad. Sadly, today I forgot to hit go live again. That's the second time that's happened. Pretty embarrassing, pretty embarrassing. But how's everyone doing? Hopefully you guys had a wonderful Tuesday. Markets are still pretty hot. I mean, CPI came in hot, sadly. So the market's pushed to the downside. I was expecting that 2% drop yesterday if the CPI came worse than expected. So we did get that 2% drop, but off the open, markets just ripped up to the north side. Later on, we did break the low of day. I mean, I think if I remember pretty close to the end of day, we broke the low of day over there on the QQQ. But the question is as to how the market kind of prices in going forward over here. That's what the question is, as to where the market moves forward, and that's what we're here to talk about and look for trade ideas off of that. So why don't we dive right into the charting and look for all the stocks on the watch list of what we have. A lot of stocks on the watch list over here. My goodness, all the way from earnings to small caps to earnings from last week, and you guys know how much we love the mega cap, so we always have the mega cap also on board. Quick shout out to everybody in chat over here before we get started. Piccolo coming in saying thumbnails keep getting hotter and hotter. I appreciate that, brother. I do put in a lot of work, so I appreciate the love and support on that one. TH, I wonder exactly how you missed today's plunge. You know what? I already replied to you. Basically, yeah, you know, it sucks to not being able to trade right at the moment because we're not allowed to remote into our prop firm software. So it sucks to not be able to do that. I have to take care of my dog. No one's really at home at the moment for me to take care of my dog. It would be a waste of time going into the office, trade for 2 hours, then come all the way back home. But clearly not, because the opportunity cost is insane at the moment when you're seeing stocks like ARM, SMCI just break out off the open and run to the upstairs. A lot of FOMO, and even more FOMO when days like today happen, when the market just flushes off the 830 number, giving you a beautiful short opportunity. Later on, the market actually flips and gives you a wonderful long off an area that you were already looking for. So there were so many opportunities over there for me to take advantage of. I just wasn't able to do that for myself, sadly. But you know, no FOMO, no FOMO. The point is, the markets are always there. Markets are not going anywhere. So we'll just eventually, when we get back there, we can have fun with it. Don't forget to go live, Brad. Yes, don't forget to go live. Think with Bookmap. Yo, CDP, what's up, buddy? How you doing? Richard sent the like and subscribe. Was wondering if I can ask a question. What do you think about ES? Will it hold on the long trend and trap all the long bears? I mean, I was just kind of talking about it. Maybe we can just go to the full screen over here. So let's get started with the charting for today. And thank you for hitting the like and subscribe. Much appreciated. Thank you for hitting the like and subscribe. Welcome to the family. You're talking about the ES, so the S&P 500 futures. You can also look at the S&P 500, I guess. Let's actually quickly shout out to one of the greatest channels out there, Think with Bookmap, who is currently, look at that, they're number one on my channel because I watch them every day in the morning. Not the ES as much as I watch the NQ. I'm a Nasdaq trader. I'm a futures not a futures trader, sorry, but I'm a Nasdaq equities trader. I trade more QQQ based stocks, so I look at the QQQ one, the Nasdaq one. But if you ever want to go look at a channel streaming, you know, the information that you really want to see, beautiful visual representation, basically Bookmap, go check out this channel over here, Think with Bookmap, because you asked me the ES question. That's why I brought up the channel over there. In regards to what I think about the bull traps, bear traps, and all that, I mean, it really depends as to how the market prices in. The market priced in a ridiculous rate cut even after Powell and the FOMC committee came out and said that they're not really going to cut anytime soon. They're going to hold the rates a little bit longer, and now with CPI coming out not really the way we want to see it come out, they might even say we're not going to cut it before May. They were expecting to cut it by May, not before March. Or sorry, not on the March FOMC date, but on the May FOMC date, they're gonna think about start cutting rates. But we're worried now that they're gonna, you know, maybe hold it a little bit longer. So the market might need to start pricing in a little bit more bearishness. So far, the Mag 7, the QQQs have been so ridiculously strong that we really shouldn't be kind of singing the bearish tone just off of this one CPI move. We still have quite a bit of stocks reporting earnings. For example, today we had Airbnb, Upstart, Robinhood, Lyft. We still have a bunch of other stocks coming up later on. A lot of these stocks are pretty much near all-time highs, if I remember correctly. DraftKings, maybe not DraftKings. Yeah, maybe not DraftKings, near all-time high. Roku took a pretty big plunge today in the after hours, or not after hours, intraday later on in the day, if I remember correctly. Crocs is a pretty big mover usually. Coinbase, you can't ignore Coinbase. We still have Nvidia to report, so quite some big names yet to report. I don't think we should start screaming doomsday on the market just yet. You know, the market is still pretty much bullish. The sentiment of money going into, I think these are just graphics that I saw on Twitter, right? I'm just kind of regurgitating information that I've been scrolling and doom scrolling on Twitter, which is the tech sector has seen inflows way bigger than they have in the last 2 years, and the money pouring into this tech sector is being very bullish. So you just want to kind of you know, be careful going with the bullish tone. You don't want to get Michael buried, right? So absolutely buried 6 feet under every time you scream shorts, and the market just doesn't go that way. Woohoo on the Bookmap, love that channel. Yes sir, thank you for subscribing. I'm gonna ruin that name. I'm not even gonna try. I'm just gonna say MM because your first name's M and your last name's M. Mariah? Okay, maybe I didn't screw it. Now Moira. Oh, okay, that was pretty easy. Moira, that was pretty easy. I got that one. Slam dunk that one. Moira, thank you for joining. Welcome. So my outlook for the S&P 500, I mean, we're still holding the trend. You can see how the S&P 500 futures are currently bouncing off the 21 EMA. This is on the daily chart, so you can see it's still kind of with the trend. We have the 50 period EMA around 48.26 and the 100 period EMA around 46.91. But I'm not really a futures trader. I can't really give you futures levels like that. I'm more equities trader. I use futures moves, however, to help me gauge when I'm getting into an Apple long or a Microsoft long and so on. So hopefully that helped you address it. I just want to let you know that I'm not a futures trader at all. I would love to get trading futures more, maybe somewhere down the road. Let me get good at equities first. Let me get good at equities first, then I'll kind of dive into futures. But today's watch list, let's get started with that one. We got a pretty long, extensive watch list, starting with Airbnb coming out with a little bit of a mixed report and hence a little bit of a mixed move. First going all the way to the north side. Maybe this was, you know, with light volume, not much volume actually coming in. Actually, that's not the lie. That's quite a bit of a volume. So first to the upside, but later on, sadly, Airbnb did flush down. So let's go see if we can find Airbnb's Where is it? Airbnb's earnings report using our good friends at Benzinga. Shout out to Benzinga. If you want to use the code Benzinga or if you want to use Benzinga, please do go check out Benzinga using the code down below in the description. It will help your boy TraderPrad out if you do so. We're gonna quickly copy that, post it in ChatGPT because we're lazy. Summarize in bullet form for us, please, and let's see how Airbnb's earnings report came out. So Airbnb, a 17% year-over-year increase on revenue. Airbnb company experienced continued strength in travel demand and benefited from foreign exchange rate tailwind. Okay, that sounds like a good thing. Quarterly loss of 55 cents per share with 63 million in net cash operating activities and 46 million in net cash flow. Airbnb had 10.1 billion in cash equivalents and short-term investments as of December 31st. Booking value went up 15% year over year. Nights and experiences, not sure what that is, but okay, I guess more hotels and some other sorts of experiences. In general, 12% up year over year. Average daily rates were up 3%. Everything is up. So why did they go down? Maybe the guidance of some sort. So I'm looking for that reason. Maybe they flushed down. Q1 revenues expected between 2.03 to 2.07 with the higher take rate year over year. Where's the proper guidance though? I don't really see any proper guidance overall. We did flush to the downside after making a big move up. I mean, this could be one of those moves that we've seen recently where the stocks, you know, originally flushed down and then later on reclaim yesterday's low, reclaim yesterday's high, and then end up going higher. I'm kind of trying to remember what stock did that recently. Not Waste Management. Trying to remember if there was a stock that did that recently that we could kind of maybe pull up. Right there. No, this one didn't. Never mind. Maybe you guys remember, but I can't really remember at the moment. But Airbnb flushing to the downside, sadly, and now we're looking for some levels. So let's kind of turn off the extended trading hours, go into the 60-minute time frame, and look for some levels that we can kind of play with tomorrow. Right off a bat, I see some area right over here. It's some area between 142 to 144. A little bit of a wiggle room from 142 to 144. Possibly could see some supports being built into this position. Today's close was 150. And we're right around these areas too, if I remember right. The after hour move was right around 153, 150. So if we do flush to the downside, I would expect this 144 to 142 area. Maybe I draw a line from this one too, just to be safe. This 142.50 to 144 area, I would look for some buying to come in, some supports to get built into for me to look for some longs, and then maybe you look for a move back into 150 if it's possible. Or maybe the VWAP is somewhere around 147, 148, and that's basically the move you get back into. Overall, the earnings report over here is indicated as a red earnings report because they missed their EPS. They were estimating 65 cents per share profit, but they reported, I guess that's a pretty big miss on EPS there, Prad. Yeah, it's not an inline report at all. That's a pretty big miss on EPS, and hence the report might be a little bit more bearish than we were thinking originally. So Airbnb could just possibly flush to the downside, allow us to look for longs over here. But if it's not able to hold 142.50, then you possibly could look for a short for a bigger downside move. If the market's flushing too, then that could kind of help us out with it. But I would be looking for more, you know, shorting on pops. If we are somewhere down here already and looking for some weakness down over here, I'd much rather wait for some pops. Maybe the stock pops into VWAP, like I said, the long opportunity over here, taking into VWAP, taking for that short opportunity. You could possibly get long, flip afterwards too. So very important for me to see what the stock does in pre-market. Right off the report, it just said a lot of things were just up. But as you guys can see, the estimated was a profit, but they reported a loss, almost 183, not almost, exactly 183% flip over there, surprise. So move to the downside was warranted, I guess, after the big move to the upside, and now we're expecting a bigger flush to the downside, at which point maybe some longs could come into play. Wait, those are the lines I'm already putting in, so we are already there. I kind of thought we were into yesterday's range. But no, we're already there into those prices. So that's even better. You're seeing the stock kind of come and consolidate into these prices. You're seeing the stock hold into that 140 area now, 141 to 140. So technically it's this whole area that you're looking for. Nice bounce right off that, and then you're seeing consolidate right between our ranges. Mamma mia, we love to see that. So Prestrodom is striking one more time for you guys. And now the question is, do we start seeing buying settle in this areas? We reclaim yesterday's low, and then we start moving into yesterday's high, at which point we could reject that. Look at where earnings anchored VWAP is. The stock is pretty far away from the earnings anchored VWAP. That's basically showing you where the best price, the most premium price was for the stock ever since the earnings report came out. And we're quite a bit of a way away from it. We're actually right back into yesterday's high is where the premium price is for the stocks. That's telling me there's a very good chance the stock in pre-market itself starts trickling back higher. Maybe we see a rejection of yesterday's high, at which point this 183% flip of a surprise EPS pours in, more weakness comes into these prices, and we can look for a short back through. But if it's already above yesterday's high, showing buying above yesterday's high, then you just kind of stay away and wait for that yesterday's low. You kind of just wait for that yesterday's high to come into play, or you can maybe look for a small little long through yesterday's low, all the way back through yesterday's high, and then you can flip from that yesterday's high area to see if there's a short that you can play into. So a bunch of ideas over there already brewing into my head, depending on how the stock moves in pre-market. Very important to me to see what happens on this one. However, the stock on the average scale, the volume's like 4 million. The spread is a little bit nasty on the stock. If I remember trading it correctly, right off the open, it's a NASDAQ stock, so it should open up right off the bat. It's not like a New York stock, but even then the spread might be nasty on this one. It might not be as clean as you're used to trading, especially if you're trading stocks like, you know, Apple, Tesla, and so on. It might not be as clean as that. The stock also has an ATR of $4, and I think we basically pushed about that to the downside. No, a little bit more than that. Yeah, a little bit more than that. The next stock on board over here for tomorrow, Upstart. Upstart flushed like 20% down, if I remember correctly. Yeah, big move to the downside. Already down 8% on the day today. And the earnings report taking it down much more. The earnings report actually looks fine to me over here on the EPS side. EPS it's basically in line. Revenue was in line also, so pretty big move, however, on UPST. So we're gonna go check out our friends again at Benzinga, see what do they have to say about UPST. So there we go, we found an article. We're gonna put it through our friends over here. I can't spell. We're gonna put it through our friends over here through Microsoft. I said I would never say that again. Why did I say that? God damn it. Upstart Holdings revenue reported 4% year-over-year decrease. Okay, decrease coming in. That's right away makes sense of that one. Lost 11%, expected 14 cents. Wait, that's not what these guys say. You're lying to me. TradingView, you're lying to me. I guess it depends on what analyst expectations or estimates they're comparing it to. Maybe Benzinga is using their own estimates and their own numbers, and other companies are using maybe Refinitiv or Fidelity or other people's estimates. So it really depends on whose estimates, but it's basically in line. It's not that much of a beat if you look at the report. Down 19% from previous year. What are we talking about? On the loans. Okay, you're a loan company and you are an AI lending company, and if your AI is not lending people, nobody knows what the hell Upstart does. That's why I keep putting in the brackets. But if you're an AI lending company and you're not, lending shit out to anyone, and you're down 19% on that point, that's obviously not a good thing for investors. Investors are going to be scared. No matter how much of money you bring in and how in line do you report? The metrics are the most important numbers. They're showing either growth or decline, and right now we're seeing decline in UPST. Not something that you want to see, especially when the QQQs and the S&P 500s are tickling and playing in the all-time high playground. So UPST, I think this move is very much warranted right now. As you guys can see, a little bit different than what the Airbnb chart look like in terms of the anchored VWAP. The anchored VWAP is actually a little bit under UPST. UPST much below yesterday's ranges. Didn't even actually tickle yesterday's range after the earnings move. So now I'm gonna quickly turn off the regular trading hours. Sorry, turn only regular trading hours on. We're gonna go into the 60-minute time frame real quick. Chart some areas of interest for myself. So real quick, right off a glance, some sort of a triple bottom area over here. That could just be on the same day or 2 different days. That looks like 2 different days. Double bottom on this day. No, 3 different days. Okay, one day. What day was this? 1st February. This is 2nd. Yeah, so basically 3 different days, triple bottomed and kind of took off to the north side. So that area is a little bit of importance for me. I think we might just be there right now, or we might be somewhere here on the stock. More recent lows, so I kind of just want to mark off more recent lows. Let's kind of go back to the 5-minute chart, turn on the extended trading hours, and see we're below those 2 lines that we put in. So we need to go look for more levels under those 2 recent lows that the stock has made. So let's zoom out a little bit more and see what other areas of interest could we find on the stock. So basically what I see right now is if this stock is making the move up into the lines that we just put in, beautiful short opportunities at those levels, and that's what I'll be looking out for, because those were previous supports. We're gonna expect those previous supports to turn into demand, and we actually have a video that we're gonna watch today from SMB Capital to learn more about that at the end of the stream. So stay tuned, don't go anywhere. We're gonna watch that video together and see what new information can we learn from that. But right now, let's zoom out. 60-minute time frame, please. Basically 1-hour charts, and I think we might be here now for that move. The stock, however, is looking to kind of turn a little bit to the north side. If we do go back into this 29 area or even this 30-50, I'm looking for, you know, short opportunities. I want to short the crap out of this stock. Quickly, we're gonna put a line from there. Looks like a lot of support area built into that bottom. Eventually that bottom broke out and then flushed a little bit lower, creating a little bit of a double bottom into these areas. That's a little bit of a double bottom. You can even call it a little bit of an inverse head and shoulders. You got the head, the left shoulder, the right shoulder, and the inverse move. Basically, you're getting the nice little pump to the upside off this earnings number, which was bad, but they ripped to the north side. Okay, well, whatever. But this one's green and they're gonna die to the downside. You know, I'm not gonna debate it. Who am I to debate? I just want to follow the flow and follow the money, and right now we're looking for some areas of interest. So let's see if this area or this area came into play on UPST after hours. Looks like one of those lines did come into play. It's a little chopped around that area a little bit. Looks like somewhere around 25 over here, a little bit under 25, even to 24.50 came into play. 22.37 is a level that maybe there could be some support. Honestly, I think this 25 area stands out to me as a possible potential support, but I'm more interested to where can I short this stock. The stock clearly flushed to the downside, and for me to short it, looks like the today's VWAP is right around this 30.50. The after hour high, but the gap down, I guess if you want to call it, it is the gap down. That's crazy. Yeah, the gap down high is right around that 30.52, and it just so happens to be that the 30.50, 30.66 area is a lot point of interest according to me. So I'm looking forward to see what the stock does on this move to the north side, right into $29 or 30.50, at which point I will be ready to short Upstart and see what type of moves we could get to the downside. So UPST, watch out for those 2 price points. Now we get to go talk about the main stock on watch list today, Robinhood. Someone said 41% short float on UPST. I forgot about that. Thank you for reminding me. Yeah, UPST should have a pretty high short float if I remember correctly. 40%, so damn near 41%. You are not wrong. There could be a short squeeze, but I mean, the short squeeze really means the stock should be going to the upside, and we are not really doing that. Wait, this is not UPST though. It's down to more than 20%. It will trigger SSR, which could give the stock a little bit more juice to get pumped up to the north side. And the shorts covering also could help the stock go back up, but I don't think we're seeing it go much higher than where right now yesterday's anchored VWAP is. So yesterday's VWAP right now right around $31. I think it gets pulled down to maybe $30.50 to $30. I don't see UPST going higher than $30 tomorrow. It is going to be on SSR. It's already down more than 10% in pre-market, or sorry, after hours. It's already down more than 10% in after hours. In pre-market, by any chance, if it opens up less than 10%, then obviously it does not open into SSR. It needs to then go back down, being 10% down from yesterday's close during intraday, then triggering SSR, which is very much a possibility. A little bit of a double top coming in the after hours, but that's way too close to the close time, which is not really a real double top in my opinion. I think if you give the market an extra 1 minute to trade, it could possibly go a little bit higher, right? So we don't really know what could happen around here. So in that opinion, you could use this as a double top 27, but maybe you just wait till pre-market. Wait to see what happens in pre-market. I'm currently imagining something like this. Buying comes in, we go over here, we reject that and go a little bit lower, or we do this, buying comes in, we go here, and then we just straight plummet afterwards. So I'm imagining two scenarios over there. There's obviously way more scenarios. There could be a scenario where it kind of never really rejects this area or this area because the report a little bullish according to a little bullish according to TradingView, but from what we saw from Benzinga and with the help of ChatGPT summarizing the earnings reports for us, a lot of the numbers were actually down on them for them, especially the loans part, down 19% year over year. So you don't like that numbers at all. Maybe the short flow component does help them out a little bit. Now let's get back to Hood, because Robinhood, the company that was previously who tried to stop the short squeeze on GME, is now trying to initiate a short squeeze of their own on their own battlegrounds over here. So Robinhood trying to battle back, kind of claw back to the north side, maybe go back to its glorious levels that it once was. I think it'll still got a long way for Robinhood to do that. I actually got the report already from our friends from Benzinga. Once again, go check out their link below in the description if you want to check out what Benzinga software is like. They're an amazing news platform. They have a squawk every single day in the morning, coming out with the scanners and stuff too for you. They also have a charting platform if you're interested in that. So go check them out. Check the link below down in the description. Robinhood, I did get a little bit of time earlier to read this report myself. All I saw was just beats. 20% beat increase year over year on what is this, on revenue. 41% net interest revenue year over year, revenue increase of transactions. Cryptocurrency revenue went up 10%. Options revenue actually went down. That was the only thing that went down by 2%. Robinhood funded customers total went up by 420,000 more, ending with 23.4 million customers. Asset under custody up by 65%. I could just keep going. I could read it sentence by sentence to you, but at the end of the day, the most important numbers are all up. The only thing that was down was the options revenue, and it was barely down either, only down 2%. So Robinhood kind of showing a lot of growth coming in, and hence they deserve to be in these areas at the moment. This double top, triple tops, I guess right now you could say a double top right into this 13-15. That's not a double top. Is that where we're at right now at $16? That we could very well be at that $16. We're looking at the stock right now on the daily chart for those of you wondering. I do like to take a look on the 60-minute time frame, but I'm just currently just quickly taking a glance at these stocks. You know what? I'm gonna do this instead. I'm gonna put a box instead. Put a box. Put a box. Draw a line. Draw a line. Plop these two lines for myself, and let's go to the 5-minute time frame. There we go. Yeah, we're right into that 52-week high double top area on the stock. Just kind of struggling with that $13 You can see how we kind of pull back and trade under the earnings view up, and then later on we just slightly get back above the earnings view up. I think tomorrow there's a good chance for the stock to maybe battle this 1350 zone and then punch through that 1315. This report was amazing in my opinion, right? Amazing in my opinion. They reported a profitable report. They reported more revenue. They're showing growth across the board. They're showing that people are kind of maybe going back to Robinhood after maybe boycotting them a little bit. So all things are looking bullish for me on these guys. So I am looking forward to see how the stock sets up tomorrow. If we are able to get above 1350, show buying above 1350, that looks pretty damn bullish to me. That looks pretty damn bullish to me. So let me quickly put some levels over here. 1350 for Robinhood as a level of interest. 1250 is possibly a good support zone to look out for, just because how we played in the after hours over here. Held that 1250 multiple times after every single flush, especially after that big flush. Came down, held it again, popped back, held it again, and then popped back. So that hold of that 12 to 1250 area, pretty interesting to me. I think tomorrow, however, this earnings anchored view up will be pretty important. That's like almost an inflection area. So it's around $13. I'll be watching how that $13 plays out tomorrow. If I remember what I said on UPST, I don't really want to zoom out. So yeah, let's kind of go back to UPST. I think I said I'm watching 29, and then I'm watching 30, 60, 30, 50 areas. And as for support, we're watching this 25 to 24.50 area for support on UPST. And Airbnb, I think I said, what did I say? 142. I think I'm looking at yesterday's low for sure first. So yesterday's low is a possible resistance, which is around 148.50. Yesterday's low. The next resistance probably around 153, which is maybe you can maybe kind of stretch that level from 148.50 to 150, and then see if 150 rejects, just in case 148.50 doesn't reject. That is a possibility, because 150 could be a little bit more psychological. More people might just be waiting to see what happens at 150, but they might be more aggressive into 150 than rather than just waiting at 153 if this report was bearish enough. I'm just kind of like making up possible scenarios over here, right, of things that I have seen before. So looking for some any exhaustions between these ranges. That's why I don't really want to get long through yesterday's low. I would rather watch yesterday's low break and then come back below yesterday's low, show me more selling back through on the way down, and then I would love to smash that area. That's why I'm watching that as a resistance. After that, we're looking for that 153, which is around yesterday's high, to kind of come into play. And as for supports, I'm looking for 142.50 to 144, and then right below that 140 flat, 140. Now let's go to Lyft. This stock's a joke. Did you guys see what the CFO? I think the CFO. I think it was CFO. Let's go check it out. Yeah, by the way, go follow me on damn, that's a handsome looking CEO there, guys. Prad Tenev. 10 out of 10 Photoshop skills. Come on. Thank you, AI. Thank you, AI. But yeah, there you go. CFO corrects press release, says adjusted margin expansion will be 50 basis points year over year instead of 500. I'm expecting, maybe on his report it's at 50.0. It's a very much possibility that it's at 50.0, but Buddy just read it as 500 and just said it out as 500, or maybe he just forgot to put the period in the report itself, and in the report it said 500 instead of 50, and hence you saw that monster pump on this position right into that $20 high, and then it sold right off after that big rejection. One thing that is important though, after that rejection came in, it did bounce right back, and it's kind of holding this little bit of consolidation right between these two anchored VWAPs that I have set up, but clearly under the earnings anchored VWAP. So now there's a couple ideas brewing in my head over here for a lift. Real quick, let's kind of zoom out on the daily chart, see where the stock went to $20 and we're at 12. Wow. I had to really zoom out to kind of get the picture over there. That's insane. I really had to zoom out there to get the bigger picture there, because that's a little obviously insane. Look at that monster move in the after hours right into that $20. I don't even have a line at 20. The line I have is like 1836. That's the high from February 9th, 2023. Basically last year this time. 20 comes in a little bit higher than that, right around that little consolidation box. If you want to draw one, possibly could draw the box somewhere like that. So, I mean, that's insane. So, I mean, the stock clearly has shown the high now. The cards have been shown. You know, if you're playing poker against your enemies at the moment. I don't know why I said enemies, but you're playing poker at the moment, right? The game of poker. And you know the cards the other player has. Especially when the report comes out not as bullish as previously stated. So the seller, who was probably waiting around these areas, just came right back in, and then they pummeled it right back down with the confirmation that they had that the report was not as bullish. They were way too aggressive, and they took advantage of this pump the stock had, and they were correct at the end of the day, right? They were correct. Now, one thing that's also excites me is look how the earnings anchored VWAP is right into this purple box that we drew out, which we were expecting the stock to be at, but then we were like shocked to find it at the higher ranges over there. So I'm expecting any pumps into these areas over here is a rejection zone. So $15.50 to $16, possibly seeing some rejections on the stock. And if the stock is going to, I mean, are you kidding me? If the stock is going to $20, instant shorts for me in my mind. We've seen the cards already. The stock is already the move has been explained to us, and I'm not going to expect anything more than this one. If it does go higher than that, I'll be very shocked. I'll be very shocked on this. The stock's ATR is also only 61 cents. So, you know, I don't think we're getting more than $16 tomorrow if this is a bullish report. And if it's a bearish report, the fact that we did this should give it a little bit of a rejection here for us right back into yesterday's high, at which point we should find some buying. Yesterday's high should find some buying. Already finding some buying right into this 1326, which was a line that we put in. Where did that come from? Right into this little consolidation high. It's a nice little consolidation high. There's another little high over here. Instead of that one, let's kind of zoom out of this chart and put in the 60-minute time frame, turn off extended trading hours. There we go. A little choppy. All right. Where was the new box that I just drew? Somewhere here? That was the new box that I just drew? I guess so. Doesn't really show you anything, but maybe there could be some buying in that area. I rather just wait at yesterday's high once it rejects this. I'm more looking for the short anyway. So I'm looking for the short into that 16. And if the stock is holding 16 and going above 16, then I'll gladly join the long. And then I'll wait after it goes to 20 or wherever before 20 it finds that exhaustion. Then I can kind of close my position and maybe flip into a short. So I'm looking for that 16 area as my most important price. Let's see how the stock moves in pre-market. Let's see how the stock moves in pre-market. Ooh, quite a bit of follows today. I like it. Let's go. We're growing. We're so close to 1K, ladies and gentlemen. Let's go. Appreciate the like. Appreciate the subscribes. Much appreciated, ladies and gentlemen. Love it. Almost at 1K. Let's go. Miss Lucia, buyback. What stock is buying back? Are you talking about at the time that you posted that? I'm guessing Airbnb. No worries. What do you think about LAC? The company LAC or Lithium American Corp? Oh, Lithium. Okay. I mean, never really traded it, but I know. Oh no, I'm thinking about uranium. URA. I'm thinking about uranium. Sorry. How is uranium doing though? I got sidetracked. LAC. Yeah, I haven't really traded lithium companies or lithium stocks recently for a long time, or ever. I should say ever. I don't know why I'm acting like I did ever. I don't know how they move. I don't know how they play. I'm guessing they're a little bit news based. I have to do more research on them. You know, the whole EV sector I thought would kind of blow this up, and they obviously did blow up a big rise in volume ever since EV sector came into play, but now kind of dialing down looks like, so not really looking too good over there. I'm not really sure how lithium fields and lithium minings work. I've seen like some YouTube shorts, and now that I've said it out loud and my phone like listens to me all day, I'll probably see more YouTube shorts about lithium. I'm already seeing like oil rig algorithms. Like I'm like stuck into oil rig algorithms where I see people changing the hoses and doing some crazy work and only getting paid like 20 grand a month. Like these guys should be getting paid the salary of an NBA player. Like they should be getting millions of dollars. This is insane. This is absolutely insane. Love your music. What is the title? It's not my music at all. It's let's see what the song's called. There you go. The song's called Kinishu Softy Redmatic Serenity. It's from this channel called Lo-Fi Hip Hop. I usually play it in the background when I'm trading or when I'm studying or when I'm reading a book. So yeah, I usually just leave it in the background. I'm glad you enjoy it. Airbnb doing a buyback. Okay, that might help them go up a little bit, right? They're doing a share buyback, usually a good thing. In terms of LAC over here though, my friend, I don't really know too much about lithium at the moment for me to make a educated guess. In terms of technical analysis, lithium on the daily on a big downtrend, not exactly what you want to see, I guess. Go on a 60-minute time frame. I'm gonna give it as a day trader's perspective. I'm gonna give you a day trader's perspective, not really a swing trader's perspective for this one. If you're looking for a trade right now on lithium as a day trade, then you're possibly just, you know, looking to see what happens over here into $4.28. If $4.28, let's say 4.30. If 4.30 rejects, then you got a short to the downside, possibly into $4, which is a 30-cent move for maybe a couple cents of risk, right? So you're looking for that opportunity over there. Great risk to reward. And then maybe even a bigger extension all the way into this 382. I don't know if 382 is an all-time low or not. Let's kind of zoom out. And it's pretty damn near lows. That sucks. Why is lithium doing so bad? The market's at near all-time highs too. Lithium, I don't know what the news is. Yeah, I can't really give you my educated guess. I'm really sorry. And technical analysis though, you're kind of just playing between these ranges. You're waiting for this range to reject so you can get some profits into this range and an extension below this range going into $4 and a below $4 move into 382, and then you're kind of just looking for this range to hold, and then rejected this range for a bigger move to the downside, and the same thing vice versa. Reject objective here for the short, hold to this area for the long. Overall, I kind of just wouldn't trade it unless there's a real big catalyst and a big reason to. And the volume right now looks like on the daily chart has been not really too bad. It's not that bad of volume. 2 million, 2.5 million on 30-day average. But for a $4 stock, 2.5 million is almost nothing, right? You want to see like a lot more shares being taking place for a $4 stock. Let's head back to our earnings board over here. We only finished 4 or 5 stocks, and we have a lot of stocks. For those of you interested what our earnings board looks like, this is what our earnings board looks like. We forgot to color some of these stocks as important or not. Orange being a higher importance, and the blue being a little bit of a lower importance for me. So looking at some of these earnings reporters that reported today after hours with high importance. And the next one on board is MGM. Let's go take a look at MGM for tomorrow. MGM with the earnings report after hours. How did you guys move? I currently have regular trading hours only enabled, so that's actually good. You know what? That's actually good. Let's quickly take a look at the report. They estimated 71 cents. They reported $1, so almost a 50% beat. Nice. And they reported almost a 5% beat on revenue. Looks good. They are stuck in this range today. Yesterday's high, or anytime you see yesterday's high or yesterday's low, is basically today's high and today's low. It's because I'm getting ready for tomorrow. That's what the point of the show is. The after the after hours with your boy TraderPrad. I still have to get used to it. But the report looks pretty bullish to me. Let's kind of get charting here for some levels of interest. We have this level over here. We kind of did break out of this level slightly, but we came right back. Is that all on the same day? That's all in the same day. Wait, we're on the 5-minute chart? Get me out of the 5-minute chart. What the hell? Take me to the 60-minute chart. Thank you. I didn't want to be on the 5-minute chart for that one. Okay, so we're right here right now. Right here. Right now. That's a pretty solid level for right here right now. Closing around $45.66, right around these ranges. On a positive earnings report, I mean, why would I not expect this high to come into play? This $47.50 to come into play. Why would I not expect that? However, if the report was read negatively, probably finished that sentence properly. However, if the report was read negatively, maybe didn't expect that. We're still on a little bit of a trend. The smaller time frame trends are pointing down. The 9 EMA and the 21 EMA are pointing down, which is scary. But the 50 EMA, I mean 50 EMA is also curling down, and so is 100 EMA. The 100 EMA is kind of flattening out. So maybe this one actually is flushing. Let's go check it out. See? Kind of saw it in the EMAs a little bit over there. Kind of guessed it by looking at the EMAs. I cheated. I wanted to guess what direction the stock might have moved off of the earnings report. It looks like it wanted to go higher. It wanted to kind of go higher a little bit, but the yesterday's high came into play in the earnings. Yesterday's earnings VWAP. What am I saying? Yesterday's VWAP came into play after earnings over here. Basically, whoever was selling a couple days ago and yesterday, so yesterday and today came into play after the earnings report and flushed it a little bit more to the downside. Maybe a little bit had to do with the earnings report guidance overall. From a quick glance, we do see a beat on EPS and revenue, but maybe the guidance was worse enough for them to actually flush, and now we're seeing some negative sentiment being poured into the stock on MGM, whose ATR is only $1.13. So maybe expecting some sort of a big downside move on the stock would be crazy, but expecting 2 RVOL, that means I'm expecting at least 1.5 times ATR, which is about $1.50 move for us to play with on the stock tomorrow. So let's go back onto the daily chart and kind of see what other levels of interest could we map out real quick on the flatter side, because you guys, whoa, what the hell, you guys know that I do like trends, but as I always say, a horizontal level is way more important than Then a trend line. A horizontal level shows you where the buyers actually are and the sellers actually are. So you see this double bottom over here kind of coming into play. You got this little nice little consolidation on the 60-minute time frame. Every little candle is basically 60 minutes worth of information, so amazing consolidation in that. That's why I'm going to use this area instead of kind of putting a line over here. Even though it's never really a line in the sand, it's always a wiggle zone, and that's why you use this little wiggle over here. Wiggle, wiggle, wiggle. Boo, boo, doo, doo. I would have whistled, but I don't want to break your guys' eardrums, so I don't want to whistle there. But looking for this 43.62, did we actually go there? Let's kind of zoom back out. I know we flushed down. Yeah, look at that. Look at that. Ladies and gentlemen, if you have not already, check your phone messages from your mom. Go check it out. It says, don't forget to hit the like and subscribe, because we keep bringing in those banger charting levels for you over here on the stock market. Man, we need to stop wasting time though. We have so much to walk through over here. So let's kind of run through. MGM 43.50, clearly a level. 43 bounced right off of 43 and kind of consolidated above this area a little bit. So you're looking for this zone, the earnings anchored VWAP to the downside too. We're very close to yesterday's ranges also. This report looks pretty bullish to me. We might just have to kind of dive deeper into the report a little bit. So let's do that really quick. MGM, what's your report looking like, sir? Maybe didn't give it a gender because I don't know who. I remember. Oh no! God damn it! Oh, they are doing it in bullet form. Yes. Making a 22% increase compared to the same period previous last year. Okay. Okay, we already saw that. 3% year-over-year increase. I also want to quickly mention that Wynn Resorts came out with a pretty good report. Las Vegas Sands also came out with, if I remember, a pretty good report. Companies in Las Vegas were expected to or some report came out that the Vegas gambling companies have made the most money this year. So MGM, I think I was expecting them to, do good. This move obviously is a little bit surprising to me. But coming back to the report, showing a 3% increase, okay, on the, yeah, there you go. Las Vegas revenue reached 2.4 billion, showing a 3% year-over-year increase. Regional operations showing a 12% year-over-year decline. Okay, China revenue reported. Okay, that makes sense. I guess because of the COVID policies, a lot of people didn't really go in there. So now that they're going in there at 462%, I think it's more important to kind of look at the numbers, not compare it to COVID, but kind of compare it to 2-3 years before COVID, when the market was really good. How was MGM doing back then before COVID, and are we kind of coming back to those numbers, at least in the China territory? I don't know what the numbers are. That's a little bit of a deeper research, deeper dive you might have to do, but so far it's a pretty good indication to the right direction after COVID and so on. But if you want to kind of use fundamentals to make a little bit better judgment on a trade idea, you might want to dive deeper into checking their earnings before COVID, see how they did in their Chinese sector then, and then compare how they're doing in their Chinese sector now after COVID, and see if the numbers are doing better or worse, and that might give you a better judgment on where smart money might place their money tomorrow on MGM. However, right now on the after hour move, we saw them, it's to the downside. What are we talking about? Highlighted new all-time records for full year and fourth quarter EBITDA. Super Bowl impact. The company briefly mentioned a positive impact of Super Bowl. I think Super Bowl was not at their resort. It was at Wynn Resorts. Maybe not. I forget. No. What stadium was it? Either way, they have the resorts all over the strip, so they can kind of sell. They will probably book to absolutely to the max, because there's no room usually when games like that happen. So yeah, it makes sense. Corporate developments, what are you, up or down? Additional capacity, close on an recently closed on an extension senior secured credit facility, providing an additional capacity of 610 million, extending to its maturity to 2029. Okay. Expressed optimism for 2024, citing the launch of its Marriott relationships, who also announced earnings recently, if I remember correctly. Opportunities to increase convention rooms nights and international mixes. Okay. Share price reaction. Stock obviously went down, and we saw that take place. So MGM overall report, I think the main important report was that big decline number, kind of overshadowed maybe by the big increase number for those of you reading the reports, but that decline number, the 12% regional operational decline year over year, bringing down the stock to the downside. Now you're waiting to see what happens from this 43.50 to 43 tomorrow. If we are able to get under 43.50 and also get under 43, I would love for a bigger short direction, move to the downside. I think the stock could easily go back somewhere down over here, all the way down there into $41.31, at which point we could possibly look for a flip of a long. That's quite a bit above about 2 ATR move. You know, I'm saying we kind of open into this range. Hello. We're kind of opening into this line that I already have around this 43.60, and then kind of maybe 1 ATR, which is $1.13, would be right here, right there. A 2 ATR move would be about $2.30, would be right around that 41 low. So looking for the next support right around that 41 low to the downside. The resistances, obviously today's low, and then above today's low would be today's VWAP, and then above today's VWAP would be today's high, which is exactly where yesterday's VWAP would be around. So looking for today's low, which is 45, as the first area of resistance. Second area of resistance around where today's VWAP is, which is 48.50, and then the second or third area of resistance, R3, right around 46. Was it 47? It's 46. Can you look at Nvidia, please? ER next week, next stop 750. I mean, yeah, we do have what's it called? Semiconductor stocks coming up very soon. We'll talk about those ones. In terms of 750 and you know, crystal ball numbers throwing out there, I can't do that with Nvidia. Nvidia is just one of those crazy stocks where anything can happen. I do want to say though, I think SMCI is. We'll talk about it when we get there. We'll talk about it when we get there. Okay, MGM, basically looking for those areas. Now, next stock is Zillow Group. However, the stock didn't really do too much for us in pre-market, or sorry, after hours. It did trickle up with very, very light volume. The earnings report did come out. There are some clear levels we can kind of map out right into this 58 zone, and then some other levels to the north side. I think I'm just gonna wait for the stock to show me what it wants to do in pre-market first. Show me more volume, get a little bit more active, because the stock's average 30-day volume is only 500,000 for a $50 stock, so it's probably very spready. You're not going to be able to take a lot of size on the stock, and when that happens, it's just not interesting to even trade. You know, you're much rather worth it to go trade stocks like Lyft and UPST tomorrow, which will do 20, 30, 50 million dollars, 50 million shares traded in a day. But this one, if it doesn't even do a million, then it's not fun for us to be in. So we'll wait for the pre-market to show something for me on Zillow Group. AKAM, the next stock up coming up for tomorrow. Another stock that flushed to the downside on what looks like a mixed earnings report, barely missing on revenue, barely beating on EPS. So mixed earnings report. You can see how it kind of found a lot of support into this 115, 112 area. Maybe that's an important area. Let's go find out. We're under 122, so how important is that really? That level break-in is pretty sad. On a mixed report, you kind of want to hold this. You kind of want to hold the February 2nd low. Now we're talking January lows. Even more than that. We're here now. Oh, we're here now. We're in the 112s, aren't we? Yeah, we're here. We're below that. Oh, wow. We're below 114? That's not really a mixed report at all. That's not really a mixed report. I guess you found some buying here, but that's a pretty big flush. That's a pretty big flush, man. Yeah, look at the distance from the anchored VWAP too. I mean, you did find a little bit buying and you trickled back up on light volume. So maybe that was an overreaction and a lot of support poured into the stock on a longer time frame. You can see how this double bottom on a longer time frame. January low, December 2023 low coming into play. It's also right around the 100 period EMA is. That's what the teal line is. The white line is the 50 period EMA, and the two dotted ones are the 9 and the 21. So you're seeing how the 100 period EMA is also showing some support right into that 114. You could possibly drag that down below, a little bit below 114 to where the after hour low actually is, which was what, 112 something. So that whole area is of interest to see what happens if the stock does flush down. And for resistances, you're watching today's area. Cameo is a little weird. Honestly, I might have to wait for this one in pre-market too. It's a little shaky as to what the stock is doing. I might have to get deeper into the earnings report myself, and I'll do that on my own time. I kind of want to speed run the next few stocks that we have here because we also have a video to watch, and that's about a 30-minute video. So let's kind of run through the watch list, which we have a lot more. Why do I do this to myself? Okay, cart didn't really do anything after the report. It kind of flushed to the downside, flushed back to the upside. Let's go check it out on a longer time frame. Recent IPO, we do have this beautiful level right into this area over here. Expecting maybe 29-30 to come into play if the report was bullish. It did kind of come into play. Yeah, 30 came into play, and then we flushed right back down. Earnings anchored VWAP showing a little bit of buying, a lot of whipsaw right off the report, and then eventually some buying, a little bit of a pullback, and showing some consolidation right into today's midpoint. So if today's midpoint area can hold, the stock could possibly break through yesterday's high and go a little bit higher. But this move is pretty boring unless we get above yesterday's high and clearly hold yesterday's high. The stock might not even be a trade for me. So I'm watching that 28 area as a resistance tomorrow, and that 25.50 as a possible support. But that 25.50 is kind of the yesterday's low, but the after hour low, the earnings low, is actually at 24.50. So you might have to kind of keep an eye out at that area too, because that's where the buying came in after the initial maybe so-called overreaction. So cart, keep an eye on cart. Tomorrow, stocks announcing pre-market earnings. Only one of interest to me, and it's not even of interest honestly, but only one of interest to me. It's Kraft Heinz, and they have a conference call at 9 a.m. So make sure you're watching that one. Being careful for this one. Usually conference calls go for about an hour or so. You want to be careful not to get caught offsided. The conference call could easily go against whatever the report is. The report could be bullish, but the conference call could be very, very bearish, and you can see the stock completely reversing the trend that it was into on the opening drive. So be a little bit careful. I'm possibly not even looking for a trade on Kraft Heinz. I'll be honest. I mean, with stocks like Robinhood, UPST, Airbnb, and Lyft on play tomorrow, we're also going to have stocks that were in play today, such as Shopify, Datadog, ARM, SMCI, all in play again. So most likely not even worth kind of wasting our time on Kraft Heinz. But it is an earnings report tomorrow, pre-market. If it brings in a big surprise report, if it brings in a big surprise volume, then we might have to maybe get ready to chart it tomorrow in pre-market. So just bringing it to your guys' notice. Keep sure you have that one in the back of your head, K8C. But there's way better stocks tomorrow for us to possibly play with. Now, we talked about did we talk about Spotify? Spotify even on my watch list? I think I took it off, if I remember correctly. I took it off. Okay. Next one, Shopify, a recent IPO, if I remember correctly. Yes, there you go. IPO'd on, what day is that? Monday? Why am I saying IPO? Recent earnings report. Earnings report on Friday night. No, it was today morning, Pride. Why are you so confused all the time? Earnings report today morning, sadly flushing to the downside. I think part of this was just a CPI move. The CPI move flushing it. I think we will see a little bit of a correction over here on Shopify. The report looks good to me, man. The report looks good to me. So I'm looking for buying to come back in tomorrow on the stock. The report, I mean, looks pretty damn good. But if 77 does not hold, then you can't be sitting there just dreaming and hoping and praying for a long. So be a little careful on that side. We do have a little bit of an area over here. Look at how the stock has showed some buying into $74, 77 being the low of today, but the 74 area a little bit more important. Maybe 74 to 75 technically a little bit more important for me. Waiting to see how that area holds on the way down at the moment. Shopify, I mean, a big swing down after breaking out, so not the best move for Shopify after breaking out, especially on the earnings report. Maybe that is indicating that we need to maybe trickle around here a little bit more, find more buyers in these ranges before we're actually worthy enough to go test that $100 area on Shopify. I'm talking on a longer time frame idea over here, but right now as a day trade for Shopify, you want to see 74 at the very least. Or not, that's the 75 actually. So yeah, I'm saying 74 because I see 74, but that's just me being lazy. You want to see 75 at the very least holding on this position to the downside. If 75 doesn't hold after breaking 77 tomorrow, then maybe the earnings report is bearish enough. You saw that big volume candle today, 40 million shares compared to a 12 million average on the stock. So big volume candle to the downside. The candle formation itself is pretty damn bearish too. If you look at how the candle looks, most of the tail is showing you that that's very lackluster buying, and most of the movement over here coming into the downside. You can even use other tools such as you can even use other tools such as not anchored VWAPs, volume profiles, to help you identify how the stock traded intraday, to see where the sellers were and the buyers were, if you don't really like the candlestick pattern idea that we just kind of talked about. Overall though, you want to see that 75 hold. So I'm going to put 75 as a support on Shopify for myself. Next up, Datadog. Datadog had a little bit of a confused day, I guess. I just want to blame that on the market. The market kind of hurting Datadog. It did have a good report too. Same thing as Shopify. It flushed off the initial report, but then reclaimed yesterday's range. You can see how we reclaimed yesterday's low. We kind of try to hold yesterday's low and trade between yesterday's low and yesterday's high. But because of the weakness in the market, we kind of break down a little bit more and still manage to find some buying in the higher end of the ranges. Overall, very much a bullish range formation, very much a bullish move on the earnings report, kind of ignoring that what the market did idea on Datadog, not what Shopify did. Shopify gave it all up. It said, you know what, I'll give up the ghost, I don't care, I'll follow the market. Datadog said, not me, we stand together, we stand tough in the high end area, and they kind of just fought to be in the zone. So maybe tomorrow you're looking for that day 2 burst. You're looking for the stock to get above yesterday's VWAP, today's VWAP, hold above this 132, 133 areas, march into that 134, 138.60, 140. Not really expecting it to go above 140 because of an ATR of $5. That's basically about a more than $5 move for holding 133 and going into a 140 zone, right? So getting about a $5 move to the north side would be exactly right around today's high if we can hold 133 on Datadog. So for me, I want to see 133 hold as supports. If 133 does not hold as support, then it's kind of no go for me for the stock. Would love to see that area come into play in pre-market itself. And then as for resistances, today's high around 138.60. Now, Hasbro. I was doubting if I want to even have Hasbro on my watch list, but it reminded me very much of kind of a bullish move that I have seen before on positions. Even if it's not a bullish move that you're thinking, it could set up for an awesome short opportunity. So I'm looking for this area right here, that breakout opportunity. I mean, look at how the stock traded today. We basically held a previous bottom almost to a penny, right? Almost to the penny. This is a daily chart that you're watching. Almost to the penny, we held the Wednesday 17th of 2024 bottom today, bounced off of that, moved all the way up, and basically closed at the high end of the day. That's a pretty damn bullish candle if you ask me overall. So that sets up most likely for a little bit of consolidation in this area and then a breakout, or a little bit of consolidation in this area and then a breakdown, right? So I want to see this area come into play after today's move. I want to see this 52.50 area coming into play, a little bit of a consolidation here, beautiful breakdown, or sorry, breakout, or the consolidation and the breakdown, at which point you can keep getting shorts here, scalping your profits here, and then add it back on the breakdown, and multiple ideas that you can kind of put into work for yourself to trade on Hasbro. So not really excited, wasn't really excited to put it on my watch list, but after seeing how the stock's candle formed on the intraday today, got me excited for that possible breakout of that 52.50, or a possible fail breakout of that 52.50/52.60 area, giving us a short setup back through, looking for a move back into $50 or 50.60, which was exactly today's high. But I'm gonna say 50.60 to $50. Okay. Next stock, Waste Management. Not really too interested in Waste Management. I don't think tomorrow's move is going to be as important as today. The stock almost broke 200 though. It's at all-time highs. It's at all-time highs. So if you have any all-time high setups, I know a lot of people have all-time high setups. They're pretty easy. You're just taking the breakout, and if the breakout's clean, you're enjoying the breakout. If the breakout's not clean, then you kind of just close the position, you walk away from it. What I would urge people to do, instead of just blindly taking the breakout, I mean, that looks like a clean breakout setup for me, so maybe you could take the breakout long. Honestly, that's a bull flag. That's a bull flag, right? That is a perfect bull flag on the 5-minute chart right now, and you're maybe a pennant or whatever the fudge you want to call it, but this looks like a perfect breakout. If the pre-market sets up more like that, how can I do this? Ow! If the pre-market sets up more like this, that breakout of 199.50 possibly gives you 200. Waste Management has an ATR of around 3. Ooh, why am I burping now? Waste Management has an ATR of around $3, so the breakout of 199.50 can set up for a possible breakout. Maybe it's even around 200. You possibly break out of 200 and then get that move above 200, or trap above 200. So maybe Waste Management is a little bit worthy to keep on watch. The only reason I'm saying is I'm not really too keen on trading it is today it brought in a little bit of volume, not a big spike in volume. It brought in a little bit spike in volume. One thing that is bullish is, even though the market was flushing today, Waste Management just absolutely kept itself to the north side and basically formed the bull flag on the intraday. So pretty bullish move on Waste Management if you're interested in the breakout tomorrow through that 199.50/200. For anyone who's new today, and if you're interested, hello, what the hell is going on? For anyone who's new today and is interested how they can subscribe to my watch list, you can go help me out and support me on Patreon. My Patreon members, the link is down below in the subscription. You can go subscribe to me over there on Patreon, and you will get my watch list sent out to you every single day pre-market. Granted, I make my watch list. Any day that I take day off, then I just kind of don't make a watch list, but that's very rare. That's very rare that I take a day off. Even right now, when I'm taking a day off, I'm still streaming, because I'm not really day trading at the moment, but I'm still streaming. I'm still making watch lists. That's my point, right? Still staying with my rhythm. So you will basically get my watch list every single day to you on trading days, and hopefully you're able to make some sweet dollars. And any changes to the notes that I make in pre-market, they automatically will apply on your end too. So if you're interested, go check out my Patreon, link down below in the description, along with all my other social media such as Twitter, Instagram, Discord, where we're actually the most active on for trading, and Twitter is also where we give out our alerts for when we go live over here on YouTube and so on. Sometimes we post our charts, so make sure you go follow us on Twitter over there too. too, and all the other fun stuff. So make sure you go check out the descriptions if you haven't already. If you're new to if you're new to the stream, and also hit that like and subscribe if you think I deserve it. Thank you. Next stock is actually the whole sector. We're now heading into the big boy sector, the hottest sector, the spicy Cheeto, spicy chip sector is I guess the chip sector. The ARM, the SMCIs, the Nvidias of the markets. I mean, they are very, very hot at the moment. ARM absolutely ripping to the north side not too long ago, kind of normalizing a little bit. It went a little crazy. Let's be real. It went a little crazy. People were buying like absolutely no regards to what the price that they were punching into, and FOMOing behind it, I guess, a little bit FOMO behind it. But no, they just had no regard as to what their average price would be, and they were just punching willy-nilly silly all over the place to the long side yesterday, and hence we got that big move. Whoever was short also got their backs blown out, absolutely blown out. A nice little reversion right back to the downside, nice mean reversion. I think this is very healthy. This pullback is very healthy. This is not a bearish pullback in my opinion. Now the only thing that would make it bearish is if it absolutely breaks below 100, starts trading below 100. You don't want to see the stock trading below 100. We're actually at 117 right now, maybe 115 it holds up, maybe 100 holds up, whatever it is. You're looking at the 9 EMA, that's at the 104. The 21 EMA is actually at $90, or should I say 89.17. So you know, the 21 EMA, which is usually a better gauge of, this is actually on a smaller time frame chart. I don't really know how much this works on the daily chart, but you know, if you're watching a stock on a 5-minute time frame, if you're watching a stock on a 5-minute time frame, usually you'll see the stock trending on the 9 EMA or the 21 EMA. It will constantly pop and reject the 9 or pop and reject the 21. If it's rejecting the 9 way more than it's rejecting the 21, that's a strong bearish trend on the downside on that day. Same thing vice versa. If it's holding the 9 way harder than it was holding the 21, I mean, if it's holding 9, then it basically won't even have to come and touch 21. That's a really bullish trend. Over here, it's not as bearish because you see how the pops keep going through the 9, back through 21, popping into VWAP sometimes, and then eventually they start rejecting the 9, and that is a big bear trend right there. Normalizing that bear trend to the downside, another big bear trend kicks in, and then normalizing it, basically showing that this is just a healthy pullback in my opinion. That 128 area, big support came into that 128 area off the open. Later on, you see how we just traded below that 128. So tomorrow, I'll be interested to see if that 128 can give us some long opportunity. The VWAP is also right around there. It's not even 128. It's actually 126.59, and today's VWAP is right around 126.80. Isn't that crazy? One of the technical lines that we have on the stock, which is exactly the earnings day high, is today's VWAP. Science, bitch. Right? So this is not bullish or bearish for me at all. I would love to see the stock kind of consolidate in this area, show some buyers start piling in. So ARM, as a day trade, I mean, I would like for it to find kind of firm up ranges a little bit more, maybe get above yesterday's VWAP and show me better support above. When I say yesterday, I mean today. Get above today's VWAP, show me some support above today's VWAP, at which point maybe we can run into today's high, and then later on maybe break out of today's high if the QQQ is having a good day tomorrow. But if the QQQ is having a bad day tomorrow, then maybe it's going to be a little bit hard to expect these stocks to be very, very bullish. However, one stock that was very bullish today and actually broke the $800, well, I guess only 800 tickle, but almost break the 800 today and went back to the all-time high of $810 was, oh, it did break 810 today. What? Oh, that was yesterday. It broke 810 yesterday, but it almost broke 800 again today. SMCI. So one thing that I was gonna say earlier, Miss Lucia, was I think SMCI hits 1,000 before Nvidia. At this rate, SMCI most likely hits 1,000 well before Nvidia. I mean, this stock has been monstrous. Let's see what happens though. It does have a way smaller flow, so if people are just buying the stock just ridiculously compared to Nvidia, it does make sense that this could go to 1,000 well before Nvidia, and maybe they do some sort of dilution event or something. Who knows? We'll just have to see what happens on SMCI going forward. Another semiconductor stock possibly to keep on watch list is AMSC, American Semiconductor Corporation. Recently popped up 15%. Last night exactly popped up 15%, but today a little bit of an inside day. Yesterday's move was way too big of a move for it not to have an inside day today, so we're interested to see what happens if we kind of break out of this range, go into this 14-15 area on ASMC. Make sure you're watching that one too. The next sector I want to keep an eye out for tomorrow. Why did my ALEXA turn on? The next sector that I want to keep an eye out for is a small cap sector. We're not going to spend too much time charting the small cap sector because the most important charting comes on these stocks in pre-market and intraday. You're looking for those intraday bull flag breakouts. You're looking for those intraday patterns to form, right? So I'm not really too interested, drawing out patterns on these stocks, but let's quickly talk about this one, FAMI. The stock pulled back into $1 sadly after popping all the way up to this north side in the after hours. Pre-market, you can see how that 355 area came into rejection, and ever since we've just been flushing the downside sadly. That could also be right around 8 o'clock. No, that's well before 8:30, so that's well before CPI even hit the numbers. So the rejection started coming in then, and then we just kind of solidified the down move later on. Overall, still above $1. So I guess as long as FAMI can hold $1, and the same thing stands true a bunch of these other stocks I'm going to talk about. I think DBGI, is that one of them? No, not DBGI. ARBB was one of them too. I mean, big pop in the pre-market today, but then sold off. DBGI was one of them. OMH was one of them. Tomorrow there could be completely different ones. There were ones that moved around today after hours. BREA is one of them that moved around in the after hours. SNTG, the other one that moved around in the after hours, and the last one is ELWS. So 3 of these stocks moved around after hours. Penny stocks, low floats, very, very risky, very, very scammy stocks, so you want to be careful trading these positions. Obviously, I'm pretty new to trading these setups. I have been watching that these stocks have been getting a lot more in play recently, which is a lot more fun. More setups to learn, more opportunities to make money, also more opportunities to lose money, but hopefully we are able to learn how to make money and flip this playbook into our one of our stronger playbooks and add it to our watch list over here, or our setups and so on. So looking forward to see what happens over here on the small caps: Hollow, BMR, FAMI, DBGI, OMH, BGLC, ARBB, BREA, SNTG, ELWS. That's quite a bit of a list of stocks over there for us to track through, and I'll promise you most likely none of them come into play other than Hollow. How can I forget Hollow? Hollow was a little bit in play today. We did run up again, run into $43. That 44 area, which was previously a high, came almost right back into play on Hollow. Let me zoom out where that 44 comes from, right there. Oh no, that's not it. That's the 44 high. So almost that 44 high coming into play today. Today's high 43, but then eventually flushing right back down to the south side on Hollow. So I mean, I know a couple of traders that got beat up on the stock today. Yeah, you want to be careful on these stocks. Obviously, very, very careful on these small caps. Just apply risk management always. Not only on these ones, on all trades. Make sure you always apply risk management. A couple of these stocks that we're going to talk about right now. Boy, oh boy, we're almost at the end of the watch list, thankfully. I'm getting a little tired of talking about all of these stocks right now. Couple of these stocks right now that we're gonna head over to are the stocks that reported earnings recently, but have now maybe walked down on our priority list. We were waiting for a firm to play around 52.50, and that's what I have over here on my watch list notes from yesterday. But clearly that's not the level that's going to be in play anymore, at least not for the near future on a firm. Don't expect that price 52.50 to come into play tomorrow at all. Maybe we get a little bit of this price coming into play tomorrow. What is that area? Yeah, you know what? Maybe we get that price coming into play. What is that? 37.80, at which point we could maybe look for some long. So looking to see what happens right around today's low, which was at $39. So $39, which was today's low, and then right under that was that 37.80. So let's just say 38 to 37.80. Why did I put 27? 37.80 area is something to keep an eye out for on a firm to the downside. Most likely, if the market is looking bullish tomorrow, maybe we get a shake out of this area, we pull back down here, we hold this area, and then we pop back up. But overall, ever since the earnings day has come out, the stock has been flushed on the downside. Instead, it should be, you know, kind of doing the opposite, going into the 52-week high. It's going away from the 52-week high. I would like for buying to show up in the same double bottom again, but if the double bottom doesn't turn into triple bottom, then there is no longs for us to get into. So watch out to see what happens into that 38 to 39 zones over here on AFRM. On Pinterest, we were watching 35. So let's go see what happens on Pinterest from yesterday till today. Did 35 come into play? And if it did, how did we trade today at all? Around $35. So as you guys can see, 35 kind of didn't really come into play off the open. We flushed under 35 all the way up into 34.50. Maybe we opened at that price. Where did we open at? We opened at 34.84 today. We flushed as low as 34.49 obviously, and then in that candle we flushed right above 35, so kind of whipsawed under that in that opening candle. And then right after the opening 5-minute range, you see how we just never went back under 35. I can maybe even do this for us, do the replay. So we'll do bar by bar replay. Stock opens, stock goes down, bounces off that 34.50, it goes to 35, breaks 35, comes back below 35. Now you see how it's starting to hold the anchored VWAP, which is basically today's anchored VWAP or the earnings anchored VWAP, and then it starts holding 35. It starts holding 35. Every time it starts coming to 35, just starts holding 35. And that's the level that we were looking for. You could easily get trapped up in this opening move, or you could have caught that long right there, risking that beautiful low, added on the breakout at 35, added on the comeback and pullback at 35. That 35 was a pretty important level for us on our notes, and we nailed that. So now, do you want to exit replay mode? Yes, please. Now that we finally have that 35 area kind of come into play, and we are basically holding now above yesterday's low, you can see how yesterday's low came very much into play, and we're kind of trading into yesterday's ranges. Now the stock's dead to me. Now the stock's dead to me. Now I'm bored. Now I don't really care about what the stock's doing anymore. Now it's not really 35 is important. Now 35 is not as important anymore. Now it's not as important as it was yesterday, or today morning at least. Now it's more like what's going on at this 34.50, what's going on above 34.50 into this 36 area. Why are we finding sellers into 36? And if sellers are kind of just getting into 36, but they're still into 36, then what really happens into 37? So there's way too many zones over here for us to make decisions on Pinterest, at which point it's just not the best setup for us to be involved in. We can just wait for Pinterest to do a little bit more of a different move for us to get involved in. So moving away from Pinterest. Next stop, ANAT, Cloudflare. Cloudflare finally pulling back, a big pullback, a sad pullback after the earnings report. Now you're seeing the earnings anchored VWAP is basically the high of today on the stock. So the $100 area, the 102.80, absolute rejection on the stock for the high side. Not actually that much of a bearish candle. You can call that a doji candle, maybe if not, if it's a very indecisive candle. But the fact that we're under 100 is not that bullish to me on the stock. So a possible gap close incoming, at which point you could look for some long flips coming into this position. So look for that gap flip maybe around $90, $91. If those areas don't hold, then maybe you're waiting back at $87 on this position. So now you're waiting just for a simple gap close. Did I say gap fill? Gap flip? I think I said gap flip. Gap fill. You're looking for a gap fill into this, whatever this high is. 91 exactly. Into 91, and then below 91 around $87 on ANET. Disney, I don't really care about Disney, do I? It's holding in a nice box though. I'll give it that. It's holding in a nice box. Already moved. Okay, nice. Yeah, it's holding in a pretty decent box over here. Some nice support showing up right into what's that, 108, 109. I'm guessing eventually 110 area will just become support overall, and then we'll kind of burst through and start trading higher. I'm just not excited in this range at the moment. Maybe once it starts getting exciting above the ranges, then we can talk about it. Disney kind of gets demoted from the watch list for tomorrow. Palantir, we are exactly getting what we want from Palantir. Look at that, holding that recent low perfectly around that 23.30. Did I have any notes on Palantir yesterday? I did not have any notes on Palantir yesterday, but was doing exactly what I want to see it do, holding above 23, not really flushing back into 21. That's exactly where the anchored VWAP from earnings is around 22, but it's not flushing all the way back down, which is pretty bullish. And the market flushing is not really taking it absolutely out. Good. Now when the market goes back up, can it follow the market and go back up with it? That's another important thing that we want to see take place for Palantir. Tomorrow maybe we get a little bit of a relief rally. I'm not like betting on it, but maybe we see a little bit of a relief rally tomorrow. So we'll wait to see if Palantir can join that parquet. And along with Palantir, stocks like Apple, Nvidia, AMD, all of them always fun to watch out for. So AMD finally breaking that little triangle pizza pennant pattern, whatever you want to call it. SMB Capital called it something else yesterday. That's why I'm calling it differently. It kind of broke down below that pattern, but once again, you see how that horizontal line is very important to us. That horizontal line was at where? 164.15, and we bounced off of today at 164.30. So look at that. Gotta love having those lines out. Could have caught a possible long off of that area if you had that line out. If you did it, you wouldn't have. Right back into this trend lines, however, maybe now you draw that trend line somewhere there. Right? Our trend line was previously here, but now you possibly draw the trend line somewhere there, and maybe you can even do that a little bit. I don't really like that. And we'll leave that for now. I don't really like trend lines, but yeah, you get the idea. We got a way bigger trend line, which I'm waiting to come into play. A way more important trend line, which I'm waiting for coming around here, 159.77, which obviously no one wants to hear me say. So I'm waiting for that level to come into play on AMD. Nvidia, Miss Lucia asked us to talk about Nvidia. We kind of promised her that we would. So here's the Nvidia levels for me of interest. Their report's obviously next week. So until they report, it's kind of impossible to have a crystal ball on Nvidia. So far, what we have been seeing is semiconductors are ridiculously hot. People just want to buy them up. This whole AI hype is insane right now. You're watching me use AI. I mean, you're watching all my thumbnails are made using AI, and all the fun stuff in the world is basically through AI at the moment. Have you guys seen that virtual augmented reality from Apple? Like, that headset's pretty insane. Not saying that one's AI, but I'm pretty sure it uses a little bit of AI to help with the VR and AR augmentation. So shout out to Apple on that beautiful piece of technology. My God, I want to buy it so badly. Coming back to Nvidia though, pretty strong trend to the upside over here. Monster candle today, broke out from yesterday's candle, but still only down 0.7% or 17%. Only down 0.17% when the QQQ is down 2 full percent. What that means is there's still a lot of buyers on Nvidia at all times. They just ready to soak up any little downtrend on the stock. You can see how exactly right around these days lows is where we got bought right back up. Pretty cool, pretty cool. We're still under regular trading hours, so we'll go to maybe 60-minute time frame and we'll kind of put it maybe just go here. You know what? Nah, it doesn't matter. Screw it. I was trying to get fancy with my indicators. I'm just not gonna bother with it right now. Nvidia, what do I think about tomorrow? Looks like there's a little bit of a wall into 750, possibly selling into 750 expected. This high is at 746.09. But I'm expecting 750, which the stock has yet to even see. The 50 all-time high is 746.11. So if 746 kind of breaks out, then people are expecting 750 to have a lot of size sitting there. It's anyone's guess if we break through that size or not. So it's just not worth guessing. It's a coin flip guess if it's gonna break through that size or not. But if there is size there, then it's going to be fun to trade off of either to the short side off of that size or to the long side off of that size. So I'll be watching to see what happens going into 746 and 750 on Nvidia. On the dips to the downside, the two levels of interest to me are right around here, right into that 680 and the 700. So those are the only two levels that I care about. You can see how today we kind of opened below 700, I think. No, we opened at 705, but then we get below 700 to 696, but then we bounce right back up above 700. So it's not really 700 anymore, but for me it's still that psychological number 700. People are going to be making decisions off of how the stock possibly holds 700 or rejects 700, and then off of that behavior, off of that significant price, they're going to use a recent low to get long around, or a recent high to get short around, or something like that. So they're all going to be using that $700 as an inflection point to make a decision. So on a pullback, it better hold 700 or above 700. On a break down below 700, it better get back right through. Or if you want to look for the shorts, if it's going back through 700, you want to look for more sellers to come in. And then if it pops back to 700, you don't want to maybe see it go back all the way above 700 to 710, right? Because that's like almost half an ATR move on Nvidia. What's Nvidia's ATR right now? 22, 14, 41. So yeah, it's almost half an ATR move. You don't want to see things like that take place. So I'm pretty sure a lot of people will be watching what the stock will be doing around 700 and then around 680 on the way down. On the way up, they're possibly only watching 740 and then 750. I'm promising you, no one cares about today's high on the way up. No one cares about today's high on the way up. 746 and 750, sorry. SMCI 800, insane. We kind of talked about what we expected from the QQQ and the S&P 500. I mean, I really have no expectations right now. The QQQ exactly at the FOMC anchored VWAP. The S&P 500 also at the FOMC anchored VWAP right now. So I mean, no real idea as to what I expect from the market. What do we have for the economic calendar tomorrow? Maybe that would give us a little bit of an idea as to what to expect from it. Let's go check that out. Economic calendar tomorrow. Do we have anything important? Nothing really of too much importance. We got the crude oil numbers. So if you are an oil number trader, crude futures or Oxy or any of the oil stocks, Oxy, speaking of Oxy, actually having its earnings report pretty soon tomorrow. Oxy tomorrow after hours, so we'll talk about that more in depth. but nothing really of importance tomorrow on the economic calendar. So I guess maybe it just depends on how the traders want to situate themselves. Do we have anything going on Wednesday? Wait, tomorrow, today Wednesday? No, tomorrow's Wednesday. Thursday, we do have a little bit of an important Thursday, and then Friday I'm expecting a lot of things. Yeah, Friday, quite a bit of a thing. So Thursday and Friday a little bit more important. Hump day most likely will just be dependent on how people situate themselves off of today's reactions, off of today's CPI numbers, off of today's price actions. Will be interesting to see how people react tomorrow. So we just have to respond to their reaction and you know, kind of follow the whale and have fun with the whale over there. And the tool under the 5th tool option. How do I find anchored VWAP on TradingView? Also, can you explain what it tracks? Thanks. Oh, okay. What does anchored VWAP track? Actually, it comes from a book that I've read. It's what is that book called, Dieter? Do you remember? There you go. This is an Amazon.ca link. I don't know if it will work for you if you're not Canadian. But why isn't the link even not going through? What the hell? I can't send it in my own chat. Oh, there you go. What does it indicate? It basically indicates what a VWAP indicates. That's basically it's exactly the VWAP calculator, but instead of calculating VWAP day by day, because that's what you're calculating VWAP when you have it set up normally, right? When you're looking at VWAP normally, let's go to Airbnb, for example. When you look at VWAP normally, you see how at the end of every day it kind of just resets and then does its own thing again. So VWAP is a day-by-day calculator of what is the best price of the stock based on the amount of volume it traded on the whole day, right? So around this time of day, with the amount of volume that it's trading, I mean, there's a calculator, there's a formula for VWAP. I'm not really the best at explaining the formula behind it, but if you look up the formula, it's basically telling you that that's the average price of the stock based on how it's traded. Now, if you throw in an anchored VWAP, which is what I like to do off of earnings, the book tells us to do that. The book tells us to throw in anchored VWAPs from earnings and so on. I'm trying to remember a stock that I had today where I had to leave on an anchored VWAP from the past. I can't remember which one it was. I think it was this one. No, it wasn't. No. Which one was it? No. You guys know that meme? I'm forgetting which one it was. I was going through a stock today where the previous anchored VWAP was holding today's low perfectly. I was forgetting what stock it was. No. Freaking out over here. Well, I'll just show you an example here. We'll kind of throw in the anchored VWAP right there for Shopify from previous anchored VWAP, and that indicates now, instead of what VWAP indicates every single day by day, anchored VWAP indicates from the time period you attached it to until today. So it's a bigger average calculator instead of just what a normal VWAP calculator is. It's kind of like a moving indicator almost, but it's not, right? It shows you what the average price is from the time you fixed it till today. So that's why I try to, at least the book, the book talks about it quite a bit. That's why I like to, point it off of significant levels such as earnings days or news catalyst or all-time highs, all-time lows. You will see very often a stock oh, that's pretty interesting. You will see pretty often a stock. Let's kind of color it into a different color so we can recognize it on the fly. Let's make it purple. Okay. Now let's go to the 5-minute here. Oh, that's interesting. The all-time high anchored VWAP is currently showing support at $65. That's a bullish indication, guys. That's pretty bullish. Because you're watching a negative anchor VWAP flatten out and now curl up. That's a change in trend. A change in trend. And this is where you basically kind of look for the long. If you're a long-term trader, you put in an anchored VWAP from the all-time. Why the fuck is that anchored VWAP somewhere there? Take me back to the daily chart and put it there, please. Okay, anyways. So you can kind of take the breakout of this area, or even the breakout of this area, because you probably get stopped out over here. Then you take the breakout after, and then you can kind of take profits on the way up. See how later it's supported, popped up. So the all-time high anchored VWAP is now showing you some great support around $52 on the daily chart, but on the 5-minute chart, that one's actually at $65. I like anchor VWAP. So there's an example of how it works on a longer time frame, and the book has amazing notes. Like if you want to go check out, there's free examples. He literally has free examples on setups on how to trade. So yeah, go check it out. Let's go Prad to Nev. What's up, Dallas? How you doing? How'd your day go today? Let me quickly check if you posted. I would like to see some of these small cap trades, my friend. You have any small cap trades posted today? No trades posted today. But hopefully you killed it on the day. Nah, I did not cop it. The shipping and taxes slash... What's that term for when you get stuff shipped over and you get charged? The duty free or whatever it was called was like the price of the shirt itself. So I said, nah, screw it. All right, that was a quick little reply to one of my friends. Anyways, we're basically done for the day. We talked about all of our expectations for tomorrow on the stock market. We talked about what I expect from the QQQ, which is absolutely nothing. I have no expectations. I would love to see the FOMC anchored VWAP hold, but if the FOMC anchored VWAP doesn't hold, then that could indicate a little bit of maybe more bearish indication. This is not at the start of February, I promise you that. That one's still at the end of January, I bet. Yep, that one's still at the end of January. So let's move it to the start of February. I like to have a month to date anchored VWAP. So that's there. And that's right around FOMC, obviously, because that's the same damn day. Okay. And this is, I believe, the previous FOMC date in December. The previous FOMC date on December. So looking forward to see what happens on the market and what type of opportunities it sets up for us tomorrow on the equity stocks that we already talked about, most of which I'm pretty excited for. Let's see what happens. IPO calendar still most likely dead, but let's go take a quick glance at it. 9 million, 10 million, 7 million, 9 million, 6 million. Prad's going to sleep. I don't care about those stocks at all. Anything else that I want to talk about? We talked about... Yes, we are pretty much done. Now we just have the video to watch. Yes. Let's go watch this video, guys. Let's go learn about price action, supply. No, we learned about price action yesterday. Let's go learn about supply and demand. Thank you, Lo-Fi Girl. Shout out to Lo-Fi Girl. Go check it out. Go check out the channel. Very, very amazing music being played out from them every single day. Gotta check them out. But let's go check out this channel. For anyone who doesn't know what this channel is, then you are missing out. No matter what level of a trader you are, intermediate, beginner, advanced, SMB Capital has content for everybody. They will walk you through in every stage, and honestly, they've been monumental in my own trading growth. They've been monumental, I promise you, in your best traders trading growth too. At least one of your best traders won't admit it because he's got too much of an ego. But you know, every trader out there loves SMB Capital. I promise you that. They are the go-to. They are the best channel for day trading, for swing trading content out there, period. There's not a single channel, I promise you. Nope, not even that channel. Not a single channel is better than these guys. Maybe I am, but no. Even I use their channel for content, basically. So I'm watching their content here. Let's go learn from them. Let's go see how we can educate using SMB Capital another day. This one's called Mastering Supply and Demand. I gotta turn down my headphones.
Mastering supply and demand in trading is one of the most important skills you can learn as a trader, and failing to learn it can be a disaster. In this video, you'll get an in-depth guide to mastering supply and demand from our head of trader development, Jeff Holden. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and proud to have developed numerous 7- and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
In this mini course, we're going to define supply and demand the way we talk about it on the desk. There's a little nuance to it, so pay attention. We're going to talk about how you can use it to increase the probability of actually any trade that you're going to take by looking at the components of how supply and demand are playing out.
Okay.
We're going to talk about specifically how to identify supply and demand early. It's different than what a lot of people talk about. So let's get into that. And then we're going to talk through 3 essential steps when you're trading with supply and demand. Finally, we're going to wrap up everything by going through 4 specific trades that we take on the desk that use supply and demand effectively as important components of the trade. The first thing we're going to do is we're going to talk about defining supply and demand. So how do we define supply and demand? Well, supply is obviously sellers, right? It's where this imbalance occurs, where there's more sellers than buyers. That's what drives that down. Excess supply can be very prevalent and show up in a very aggressive manner, but the reality is it can also be very, very passive. It can be tricky, and that trickiness actually is what makes it so beautiful. Because before that aggressive big candle move starts, there's a lot of subtlety. And we can see that shift in the supply that's in the market right now. That little subtle shift is where we're going to start with a lot of our focus, because that big aggressive move comes way later. So many people want to focus on the aggressive move. That's really not a great way to do it.
But I want to catch the move.
The subtlety and that change that leads into that aggressive move, and then take advantage of both those. So supply is essentially just sellers, big players in the market that have a lot of shares to sell. Demand is essentially anybody that needs to get in.
Pretty
Demand
basic concept over there. Pretty sure most of us understand
Sometimes
that. If you don't, then
is people who need to cover a short. They'll act in a very urgent manner. Sometimes it's people who want to passively buy the stock. Again, coming back to that 2 components of supply and demand, passive and aggressive. One thing that really bothers us and trips up too many people, supply and demand are not support and resistance. Support and resistance are areas that are created by prior price action. That can line up with supply and demand at different times, but support and resistance are distinct points that are very different than the flex component that we're talking about with supply and demand. That's why it's important for us to break it down. That's why it's important for us to understand. Let's go back to that point again.
So I guess I'm not a supply and demand trader. I'm a support and resistance trader, because that's what I do.
They're in the market.
I trade off of supports and resistances from previous price action.
This shift can always have a couple reasons, which we'll get into, especially when we talk about the trades that we're taking. But think about it as that distinct change, a catalyst. That catalyst actually blows the support and resistance components that can lead
These
to those
two-way trade
predictable
price
moves
action.
that
Yeah,
support
TH is
and
about to
resistance
rip them
traders
apart. I'm
trade.
gonna love this one.
It blows them completely out of the
TH
water.
hates this
because
guy.
the supply and demand components override any support and resistance
TH is
components in the right
anti-SMB,
environment.
anti-Jeff Holden.
It makes support and resistance actually wildly unpredictable. So if we shift our thinking to know what supply and demand are, know how they show up in markets and what it means,
Okay, let's see it.
we can use that catalyst and we can show up and trade along with the big players coming in and disrupting that underlying balance that support and resistance traders like so much. This slight and subtle shift in our thinking gets us halfway to correctly identifying supply and demand. We talked about this point already, but let's go a little deeper now. Supply and demand is not just aggressive buying and selling. It would be so nice and so easy, and it seems really easy, if we talk about it from the perspective that supply and demand always are going to be identified using those big aggressive candles. That's what supply and demand are. They're
So that's
big candles
what
that show up on the
ARM
chart.
yesterday was,
But
right? ARM, what we would think was a over demand compared to the supply, and that's why you saw that move. People were just punching long with disregard to what the price they were punching into. That's showing you an over demand of the position. People just want to load up.
Experience has really taught us that that's not the case. We have to be so
But apparently
careful
not
with
the
this
case.
misconception, because it can really lead to this false expectation. And it really kind of sets a bad, awful trap that a lot of traders can fall into.
Okay.
You think you're trading supply and demand when you're trading these big aggressive candles, but you're really trading the end of that supply and demand. The worst part of it is it can lead us into missing out on some of the actual highest probability trades offered by those big players when the supply and demand components show up passively first and then aggressively later.
So how do we
Most
identify that?
supply and demand trading in the markets that we
How do I identify
trade,
that?
they do show up passively. It's this beautiful, subtle, but distinct shift. It's this noticeable pattern, one that produces the kind of trades that leave us just kind of hungry for more. The trades that feel right from the moment we put them on. The kind of trades that leave us with that feeling of connection, that feeling of flow with the market we're trading. So let's break it down. So supply
The
and
hell,
demand
yo,
trading
you
is
guys
a
saw that? Buddy is sitting crisscross applesauce on a computer chair, swinging his legs around. What the hell is he eating? I mean, why am I judging him? Why am I judging him? But still, like,
So let's
look at his
break it down.
leg just swinging crisscross
Supply and
applesauce.
demand
How do you
trading
sit
is
like
a
that, bro?
catalyst. It's a change in the balance that shows up as first passive and then
I don't even fit in
aggressive
this chair like that. Yo, this is
participation.
pretty
If
comfy
we're
though.
talking about
You know what?
longs, we're talking mostly
I like it.
about passive
I just can't. I
buying
can't swing my legs
into
like you do.
aggressive buying.
Because that's
And then
weird.
that flow back to passive buying.
Nah, this is.
into
Oh,
aggressive
my leg
buying.
just popped.
Those two components, that
Oh, my
catalyst
fat ass just popped my
and then
knee.
that passive and
Oh.
aggressive components have laid the groundwork we now know how to use and how to identify appropriately supply and demand. And that's how
I didn't even
we
pay attention because
increase
my
the
leg popped.
probability on
Can you
any
tell me
trade.
again, please?
Our second point is how you can
Alright, I gotta rewind.
use and how those two components change in the balance that shows up as first passive and then aggressive participation. If we're talking about longs, we're talking mostly about passive buying into aggressive buying, and then that flow back to passive buying into aggressive buying.
So that's like
Those two
bouncing off a
components, that
9, bouncing
catalyst,
up 21,
and
or
then that
if
passive
when a
and
stock gets
aggressive
bought, it
component
gets sold,
have
but
laid the
immediately gets
groundwork
bought back
we
up. So
now
you want
know
to see that
how to
happen.
use
Or
and
when
how
it
to
gets
identify
when it gets
appropriately
bought, it
supply
immediately
and
gets sold
demand.
down. When
And
it gets
that's
bought, it
how
immediately
we
gets sold down.
increase
So
the
that's you want to
probability on
see
any trade.
if
Our
supply
second
is
point
there or
how you
demand
can
is there.
use supply and demand to increase the probability of almost any trade. In reality, in trading, we don't need much of an edge in trading to be insanely profitable. We do need a real edge. We need trades with real edge. So let's cover one trade with the real edge, and then as we progress through this supply and demand course, we'll cover those other 4 near the end. But once we have a trade with real world edge, we can use the supply and demand component.
Yeah, let me
to
just get my
enhance
crystal
the
ball, huh,
probability of a
TH?
trade, whether it's a scalp,
Got two of them.
move trade,
Let me shine them
trade to
up real
hold,
quick.
whatever time frame of the trade. Applying the simple, direct principles of supply and demand trading learned here are likely to bring us into that flow where trading just makes sense, where the edges are stacked in our favor. It's that kind of feeling where maybe you get tricked into thinking this could go a little further than I think. So you want to have those problems in your trading. You don't want to be in a position where you're putting the trade on, and as soon as you put it on, it starts to go against you. Applying the principles of supply and demand take an existing edge and allow us to hop a ride on with the big players as they kind of go about their day. It can literally feel like you're sitting down to a blackjack table with a positively stacked deck. As soon as you sit down, you know if you play the right way, if you play your games with some edge, you're likely to see those follow through over and over and over again. Most people will skip over this. We're not going to. We're going to get dirty a little bit, but then we're going to come out with a new sense of how supply and demand really shows up in the actual charts we're trading now. How to identify unusual supply and demand early. This is that passive supply, passive demand. Okay. Aggressive is always going to show up as very clear full bodies. You can very easily define aggressive supply or aggressive demand as 3 full body candles. If it's a 1 minute or a 2 minute or a 5 minute or a 15 minute, whatever time frame you're trading on, even an hourly, when you see 3 full bodied, not a lot of wicks on there, of the same color, same direction, that can be classified.
Where the hell do you see that?
Aggressive.
Here?
Supply if the candles are red and they're going to the downside, or demand if the candles are green and going to the upside. Once we have that,
this
we've
has
identified
tails.
Aggressive supply and aggressive demand. When do we expect there to be a lot of aggressive supply and aggressive demand? When there's higher volatility, significantly heightened volatility. That means maybe the move's already started and then it gets aggressive. That's also prone to much more reversion. So you can see really aggressive supply leading into really aggressive demand, like we see on the chart right here.
I mean,
it makes it dangerous.
Tailed. It's not a full body candle
along with the supply in that environment.
Not a full body candle.
It makes it dangerous to trade against the demand in that environment. You want to know when to trade aggressive supply and demand and when to look to be comfortable, focused on the passive supply and demand. A simple way to identify passive supply or passive demand is when you have a 3-to-1 ratio. So when you have one large green candle, let's say, and then the next 3 consecutive candles are red, and they take out the entirety of that one green candle. Most of the time, that's showing us that passive but sustained supply, where it looked like there was demand on that green candle, but there's passive and sustained supply right there. That can be the beginning setup for a really big move. It doesn't always show up with that one big candle and then that 3 very clean candles. Sometimes it shows up as the one candle, some sideways action.
I mean, price action in this area is a lot more important than the fact that it did it in 3 bars, honestly. That sounds pretty stupid to me. I'm sorry, Jeff Holden. Look, I have a lot of respect for you guys at SMB Capital, but this is pretty dog shit in my opinion. This is fucking dog shit. Like that 3-to-1 bar reclaim, like, I think it's more valuable if you talk to people about how to identify that supply and that demand on the tape. Right now, just by looking at the stock, the chart, I am seeing a lot of fight on the way up. It goes up without a problem here, it gets rejected, gets stuffed, right? You see how it goes up, rejected, goes up, no fight, goes up, no fight, into that same area, fight, goes down, gets right back up, fight right back up. But then when it gets here, there's no more fight for the upside. The bidders are stopping. That's what this candle's telling me. And now, because the bidders are stopping again once we get back into the same high, the sellers are saying, okay, you know what? We know you guys don't have enough buying power. You guys are pussies. We're going to punch into our positions now. So that seller who's here and here is now starting to be aggressive. That seller is starting to be aggressive. You're seeing some passive selling coming in. Obviously, this is hindsight 2020. I already see the future here, so I'm kind of reading the future. But I'm reading the present by already knowing the future. But let's kind of think that we don't know this side of the chart, right? We're just reading it bar by bar. Then big seller comes in. Then another big seller comes in. At which point you can see, or the same seller chases a little bit more. At which point you can see that the buyers fought for it, but they failed the fight. Over here, into these areas where the buyers came in, buyers came back in again. At the same price again, the buyers came back in and they won that fight. This time, the buyers started coming up back in at a higher price, but the sellers were at lower prices. So they fought for a few candles. The sellers lowered their prices. They were trying to be aggressive. They were trying to bully the buyers. But the buyers who were here now were like, okay, you know what? We are joining the party back and we like the stock. We like the stock. And then that's where you see the battle between the buy and the sell taking place. These candle wicks are all basically telling you that there's still selling pressure. This right here is somewhat of a bull flag. You could have taken the breakout of this area, or you could have waited for the breakout, a pullback, and a hold of this area, and then the launch through it. This 3:1 reclaimed passive supply bullshit, it just sounds fucking retarded to me. I'm sorry. I shouldn't even say the R word. I'm sorry.
Very distinct,
Sounds
very subtle, but distinct.
Rupid to me, rupid.
We're always looking for that 3-to-1 ratio when we're trading supply and demand, because we're not trying to get caught in the middle on any of it. We're trying to appropriately identify when that balance has shifted. And a 3-to-1 ratio tends to be about the appropriate ratio for looking at supply and demand changes in the tape. Here are 3 essential steps for trading with supply and demand. These are going to set up the trades that we're actually going to take. So we need to cover those 3 essential steps. We're going to start by looking at the initiation of where that supply or demand started from. And then we're going to allow that to play out and look for a reinitiation. So again, if we're seeing something passive, let's see where that passive supply started from, or that passive demand started from. Let's see it take out that level. Let's see a reinitiation of that trade. That's where we're going to focus, is on the reinitiation of that supply or demand. And then we're going to focus on measured targets. Measured targets using supply and demand. Some people will talk about Fibonacci.
Measured moves?
Some people will talk about
measured
Fibonacci.
moves. Yeah, measured
Some people will
moves.
talk
There
about
you
it
go.
trading into a prior resistance or support area, another area of supply
That's what I
and
do.
demand. The reality is, at the end of the day, what we found is measured moves. So measuring where the initiation occurred to where the reinitiation occurred, that tends to be the best way to set targets for supply and demand trading. Now let's get into the good stuff, the stuff we've all been waiting for.
Yes,
the
please.
specific trades we can take using supply and demand effectively. So these are going to be 4 trades that we take on the desk. One's in the open, right on the opening drive. Another's the morning trade. Then there's a midday trade. And then there's an afternoon trade. You don't have to add all 4 of these to your playbook. Probably most people won't. You'll find 1 or maybe 2 of them that make a lot of sense to you. On the desk, you'll see people taking breaks after the open, after the morning. During the midday, maybe we'll get some lunch, or they'll kind of be a little more passive and looking for some very specific patterns to occur. But then in the afternoon, everybody will get focused again. Breaking our day up into these quarters allows us to stay in that flow of what's happening with the supply and demand components, because they are always adjusting subtly, but they are adjusting in markets. Let's start with an opening drive trade. The opening drive trade we're talking about is the gap, give, and go.
Ooh,
You'll see a little bit of a
I
visual
like this
reference
trade
right there, but
one of my
let's
scanners
walk
is actually
through it
made a
together.
little bit on this
So
trade.
the gap give and go. You
So
get a gap up.
this is important for
You see
me.
a give. Price action pulls in a
Yeah.
little bit from the open. It usually has to be pretty aggressive as well.
Yeah.
We don't want a methodical, slow,
Yeah.
grindy give. We want to see a pretty
That's exactly what my
aggressive
scanner scans
give
for. I'm
right
happy.
from the
Okay,
open.
okay.
So let's get that give.
Yeah.
And then what we're looking for on that give, what actually happens.
Actually, want to open up my scanner and see what stocks came on my scanner today because I didn't check it.
To enter the market, hits the market.
I'm gonna
right
open
from
up
the
my
open,
scanner right now and
causes
see
that
what stocks
drop,
popped
that
up on here while this guy's
portion.
talking.
It should be aggressive. That supply should be aggressive. And then we develop this really nice.
Yeah. See, this is what I
usually
want.
consolidation.
Yeah.
The difference between a range
No,
and
breakout.
consolidation, a range would be wide.
That's exact.
and
This
it could
guy
just
is
chop
talking
around as
about
long
my
as it wants.
setup. I
A
built this
consolidation
scanner,
usually
dude.
is a little bit tighter
I love
because
it.
there's a pending
Tell me more.
resolution.
Exactly what I want to hear, please.
So we get this consolidation down into an area of demand. The area is created by the buyers that are looking to go with that gap. What happens is there's this short-term balance between supply and demand. And in the gap give and go trade, we're looking for and expecting that the buyers that demand will step back in and take us higher. This is probably
that's the
basic
idea.
component.
So you're looking for a stock that gapped up, most likely an earnings-based stock that gapped up. You're looking for it to pull back, some sort of overextension. Maybe you can use indicators like MSI, RSI, and what's the other one? Not MSI. MSI is a computer company. RSI and MACD. There you go. RSI and MACD to help you identify, oversold, overbought indicators. But you're looking for a stock that gapped up or gapped down. You're looking for it to sell off or get bought after it moves into a certain direction. Create a little bit of a consolidation or a hold and then bounce back. This is what me and Dider have been kind of working on. So let me show you what the scanner kind of looks like this. So here we go. We have SOXX popping up on the scanner today at 10:29 a.m. all the way up to 10:31 a.m. So pretty much all the way up into that candle right there popped up into the scanner. So you would have noticed somewhere over here and you would have possibly had drawn the trend line on the stock. So let me kind of pull up SOXX, which is a semiconductor 3 times average bear ETF. And obviously when the markets are down today, this one gaps up to the north side. So you have it pop up on your scanner. Now, you wait for the breakout of the trend line. You get long after it breaks the trend line and it pulls back and holds the 9 EMA or the 21 EMA, and now your risk is basically the low of this candle or the low of this candle somewhere here, and keep your tight risk. You don't have to really risk all the way down back over here because that trend is breaking. Now you look for a long from here back through the north side. Maybe you have a couple cents of risk for multiple penny of reward. So beautiful long over there. Let's go take a look at another example. SRTY. Let's see how this one played out. Look at that. Mamacita, baby. Look at my setup. Talk shit about my setup now, bro. Talk shit about my setup now, bro. I'm gonna dance. I can't wait for my setup. I'm gonna dance. I can't wait for my setup. Talk shit about my setup, bro. Look at this one. SRTY. Got me happy. Got me doing the money dance. Got me doing the shmoney dance. The Bobby Shmurda dance over here. Initially, though, it did already make a corrective move. It already made one corrective move. So technically, it is not what we want to see it do, but it still popped up on the radar at the time we wanted it, which was 11:42. It made a new daily low after triggering. You know what? I'm not going to tell you my secret. I'm not going to tell you my secret. Come on, that's just stupid. That's just stupid. All right, so let's draw in our trend line. There's your trend line. It breaks the trend line, comes back, holds that low, and whew, Mamacita, look at that move over there. SRTY. 11:45 was the last time it alerts it for us, and we basically took that trend line breakout right to the north side. Pretty sure this was an earnings play. Was it an earnings play? Let's turn on the extended hours. No, not even an earnings play. Is this some sort of Pro Ultra Share Short Russell 2000. It's a Russell 2000 inverse ETF. So the opposite of IWM, I guess. Opposite of IWM, but wow. Gotta love it. Now let's go see some examples for the short side, because there's a lot more examples for the short side apparently. 943 BILL. Let's see how this one looks. Oh my god, please let me back into the market. Let me kill these markets. BILL popped up on the radar for the short side. Okay, so we have to draw this the trend line somewhere like, where can we draw it? Like somewhere, it's very subjective, obviously. It's very subjective. I'll draw it to my rule is move one. So the first red candle low, I guess, we'll mark it down to. So move one, move two, move three, and then on the move four is where we join the party. So move four would be right here. You would be getting short. How can I maybe I can do it over here. So move one, move two, move three, right? The top move, the bounce back is a move three, and the bounce back down is a move four. So you enter your position here with your stop right at the high of this candle, maybe a couple pennies above that. You can even give a soft stop here and a hard stop above the high of day, and you get a beautiful trade to right back to the downside. Monster short. I think that's basically a 2:1 short. Let's calculate it real quick. Give me the entry right there. Give me the stop right there, and let's see what the profit target all the way to the end of the day. You're basically profiting about a 9 risk to reward. No way. 9.42 R to R apparently, if you do actually give it all the way till the end of the day. 9.7. But let's say you don't actually give it all the way till there and you actually get out somewhere here. You still get 6R based on how much you are risking, which is about 30 cents compared to how much you end up making, which is $1.60. Big risk to reward. Big risk to reward. Blind Jedi is leaving work right now. Hardworking man. What's the time for you in Cali? It's like, what, 5 hours behind? Oh, what? 10:21 p.m.? Oh, that's Colombo. What the fuck? 7:21 p.m. Damn, that's late, bro. They got you slaving over there. What the hell? Well, not for too long. We're gonna make these NASDAQ futures money and S&P 500 futures money and laugh to the bank with it. Here's a trade that actually didn't work out for us. If you are looking for an example as to the scanner not working, CrowdStrike actually didn't end up working for us. So if you were to draw a trend line, CrowdStrike actually didn't end up working. Anyways, enough of an example test. I can do the rest on my own. Let's kind of go back to this video because we still have quite a bit to watch.
Of supply and demand trading, because it's very simple and we see it very clearly on the tape. When we look at example after example, you can see that give, that excessive, very abrupt supply. You can see that demand step in. And then you see that urgency of the demand increase as the supply completely evaporates. You see the buyer step up. This is almost always a two-leg trade because we expect that demand to be sustained.
Exactly what I like to see. Mamma mia.
Where that demand was. And we look for two waves because we expect that demand to occur, the pull in, that balance point, and then that reinitiation point. As that area develops right at the lows, we're waiting for it to crack. Once it breaks to the upside, we can enter our position right there. Again, stop at the low below the area where the demand was. And we look for one move, and then that pull in, and then a reinitiation of that demand, and that second move. After that second move, which you can use a double measured move target if you want to, you take the spot from where the initial demand started to where that initial supply kind of met us. And then that pull in came in. And then on that reinitiation, we're looking for another leg that should be equal to that first leg higher. Sometimes it's even more. After we're done with the open, a lot of times you'll see traders reset, kind of look around and see what else is out there. What other in-play names are trading? Here's a second trade that you'll see traders on the desk make. It's called the Good Morning America.
Good morning,
What
America.
happens in this trade
I
and
like
why
that.
using supply and demand components can really
like
help
that.
drive us in the right direction is because this is an opening range that develops. But unlike an opening range break, the range takes about 30 to 45 minutes, sometimes longer, to develop. So it's not really an opening range break. And when it takes that long to develop, a range break's actually a little bit prone to failure initially. So what we do is we take the components of that trade, look for where there was supply, which created the top of the range, and demand, which created the low of the range. And then we look for that shift, that subtle shift to occur. A lot of times that shift will start at the lows. So we'll see a really hard down move where it looks like there's a ton of supply. But then that sustained buying pressure, that sustained demand that does that reclaim of the entire down move. And then that's the beginning part of our trade. What we actually look for in this trade is we had that up move, and then an abrupt down move. And then we have 1, 2, 3. That's just the
How is
setup
this Good
for
Morning
trade.
America?
What
This
we're
looks like
actually
boring
looking for
America, going to
is
bed
to
America. But I guess you're
reinitiate
looking for that breakout of
as
high a
the-
day somewhere at 10:30, 11
demand.
o'clock, or 12 o'clock. So makes sense, right? You got the opening range. Usually stocks like Baba, you'll see them doing this a lot off the open, kind of ranging, and then later on in the day breaking out of the opening range high, like the opening range 30-minute high, then using the opening range 30-minute high as like a support, and then kind of getting higher. Baba is a little bit of a more rare example, but you can see stocks doing this quite a bit.
Has been holding above that area where there was supply previously. Observing that reinitiation gives us an
Denise. Oh yeah, okay. So it's previous supply turning into now demand
opportunity
zone.
to take
So
our trade.
it's
We
not
take
just
it on the
resistance
break
and
of the
support.
top of the
Although he
current
said he
range or
doesn't
the
like
extended
saying that.
range. We put our stop just below the area of the break. This gives us killer risk reward because as the trade starts to work,
And then you
we're
can get a
risking
measured
very
move
small
target
amount.
too.
And what we're
Makes
really trying
sense.
to walk into is a trending trade.
By a measured
to the
move
upside.
target, you're basically measuring the width of this range, and you're targeting the width of this range as your first profit target, and anything above that is just bonus.
So what we're expecting on this is that supply and demand imbalance that occurred is going to result in an aggressive approach of demand. It's going to result in those aggressive buyers taking us all the way out. We can risk a small amount, but what's our actual target? Since we're initiating there, on the break, and then our stop is just below the lows of that small consolidation, that area of demand, we're actually using a target of the entirety of the range. So if our range is built out, and
Oh,
then we
he's
get
talking
this
about a
little
bigger range.
consolidation here, our stop can go right below the area of
He's talking about a
that
bigger
mini
range.
consolidation. Our entry would be right above the area of the
But
mini
your target
consolidation.
is that bigger
But we're
range?
using the measured move
Jeez.
of the entirety of that consolidation
Okay.
as our target. So this
Okay.
gives us amazing risk to reward.
So your risk because of this is 2:1, but if you did a measured move from here, what I was talking about, those are usually just 1:1 because you're measuring the breakout where your stop is, where your entry is, and you're taking a profit, basically the width of your risk as your first reward. That's what it's more of like a flag breakout pattern, which tells you to kind of look for those 1:1 and 1.5:1 and then 2:1 as bonuses. But he's giving you a bigger range. I think this one's kind of wow. Okay, not sure how often this comes into play, but I guess for these guys to talk about it, maybe they have back stats to say that it actually happens more often than not. But I would need to back test this to kind of see the proof of concept behind this. Yeah, he's talking about measuring the width of this range, you still enter here with a tight stop here. You don't have a stop here. You have a stop here because if it comes back through the previous high, then it kind of negates the whole thesis of going higher. It could just rain sideways the whole day and be boring, right? So it needs to hold that area and go higher. That's why your stop is here instead of over here. But your target is the width range of this whole range.
Our expectation is not that it will be aggressive first. Our expectation is that demand is sustained, but it's passive. That's why it didn't just break out and make this giant move to begin with. It's passive demand. Passive demand can lead to aggressive demand later. We don't have to always look for that aggressive demand. Sometimes
I can agree with that.
The move, and that's where we want to exit our position. Our third trade is something that occurs sometimes in the morning, but most often, and one of the best times of day for it, we found, especially in the markets that we're trading right now, is a midday style trade. So what's happened is maybe there was something that was selling off through the open, and then it started to put in a low in the morning and then put in a little bit of a consolidation, and it's giving us an opportunity for a really nice scalp. We call this the backside scalp. It's a great midday trade, midday being like 11:30-ish to 1:30 or something like that. It's a great trade because it tends to catch people a little off guard. But if you're ready for it and you're just sitting at your seat, or maybe you went and got some lunch and came back and were surprised that there was some buying pressure off the lows, let's say, you can walk into a really good scalp. And let's break out where the supply and demand components come into play. So for this scalp, we're going to talk about there being some selling pressure on the open. A lot of times that's sustained selling pressure that gets a little more aggressive later in the day. It's just a really common pattern for that sets up the backside scalp. Then we're going to want to see some demand come in. Again, this is all something that happened in the morning. We're not worried about taking that trade off the low. What we're thinking about is if the price action kind of comes in, puts in a distinct higher low, and then puts in some sort of consolidation, we can then look across and notice where is that entire consolidation occurring. Is it occurring below an area that could be where excessive supply was? Or has that supply now turned
I get
into
what he's getting to.
Demand.
Okay.
When that area, this consolidation, is occurring above an area that could have been
bullish
referenced as supply.
Bullish.
We can now use that switch of those components to take advantage of the opportunity presented by those aggressive shorts and look for a very distinct break of the range with our stop below here and a quick, fast target of VWAP. What's really happening with that trade is all the supply that was there on the open is exhausted. But traders are still looking at price saying, well, I think there's going to be more supply there. What is really going on is it's shown nothing but demand for the last period of time. Since the lows were put in, there's a very clear and distinct big player that's present. So what we're doing is we're allowing the price action to move around a little bit, but then allowing
I've actually seen the setups quite a bit, but if you can catch this right side of the V or
as soon as that
here,
consolidation breaks to the upside,
those are money
our
prints.
trade,
Usually
our stop is below that higher low.
Stocks like Nvidia, Tesla, when they sell off, they give you setups like this pretty often. Pretty often, you'll see it happen.
It's a little thing that doesn't
and then
seem
they
like
reclaim
that much, but you
VWAP
do it
and they get back above
effectively, and it adds up
VWAP. They go
really,
back
really
to high a
quickly.
day. It happens.
It uses
Happens
the
on the
components of
QQQ
that
too quite a bit.
subtlety
It
of
happens.
Maybe aggressive demand off the lows into passive demand. Where there once was aggressive supply, now there was aggressive demand, and now there's passive demand. And the way that we're entering our trade off of that passive demand is now
Running a little late, aren't we? Yeah, I'm getting tired. I'm a little
Finally,
sleepy. I'm getting a little tired.
Is something we call above the clouds.
We're almost
It's a
done
trade
here,
that was
though.
inspired
We're
by
almost
one of the
done.
people on our desk He loves hiking. He took this beautiful
This video was
picture,
pretty long,
and it was a picture
28-minute
where
long
literally it was
video,
above
and we took about an
all
hour
the
and a
clouds.
half just
It was
talking about
unbelievable.
stocks.
That day, or maybe a
We
day
got a
later,
lot of
we
new
were all
viewers
trading,
today. I'm
and the
guessing it's
stock just
because
made
of
this move that went up through the day. And
Think
it
with
held
Bookmap.
above
He was trying to
all of the
promote my
area of
channel, and I
prior
think because of
resistance.
that we got a lot
It
of
was just
viewers,
holding above the clouds.
new viewers. So it took
In the
quite a bit of a
afternoon,
time, kind of
that can
introducing them to
signify the
myself,
potential that this stock is going
or
to
me
close
introducing
higher today.
myself to them and
So what we
answering
do
some
to
of their
identify
questions
this
today.
trade, into the afternoon, we look around at the stocks that were in play. If we see something that is put in a range where there's maybe some supply and there's some demand, then we wait for that range to get broken to the upside. We confirm that the demand is there by seeing the supply turn into demand. The price action has to hold above those clouds. It has to hold above that
Basically
prior
break out of that
supply
range,
area.
and you want to see that
If it
previous
does this,
resistance
and
turn
ideally the
supply
time
or
frame that
demand.
it'll do it is about 10 to 15 minutes, sometimes 20 minutes. But if it does that and it breaks to the upside, we can risk against that area of prior supply now we're observing as current demand. And we can look for, again, a measured move of the entirety
That's crazy.
of the range.
That's crazy. I guess, yeah, it
Or
makes sense.
If we're trading this for close of high of day, we can just hold it till the end of the day. It's very similar to the
MOC
morning
it.
trade, but the components there are different. Because in the morning trade, we're expecting
I
it
still
to be
got the
more
garbage. It's
ascending
10:30 p.m.
We're expecting that demand to be subtle and then grow and then get more aggressive. In the afternoon, in the above the clouds trade, we're actually expecting aggressive demand. We're expecting aggressive demand from the initiation of our trade. If it doesn't go in our favor relatively quickly, it's probably not going to work out as well as we think. So with this trade, we have an expectation that it'll start to work quickly, and then it'll start to get a little more subtle.
Mm-hmm.
But we're looking for that very clear and distinct change where supply turned into demand.
Demand.
And then we're
Demand
looking to go
is
with
here.
that on that continuation, that reinitiation.
I
to
demand
the upside.
you to go
So we
up.
talked about measured moves being our primary exit strategy. You know, we measure the range, or we measure that demand. There's a really
We gotta
great
watch
video
these
that
videos on
that
like
talks
5
about
times
a lot of
speed because they
different
talk
ways to
so
exit
slow
trades.
for me, dude.
And if you've been struggling in your trading,
They
or
talk
you're
so
in a
slow, it
position
like
where
puts me to
you're in
bed
trades and they're
sometimes.
starting
Like
to go
talk
forward, you
faster,
feel
come
like you're
on.
giving too much
But
back,
I understand
go
they're
check out
trying to
that
slow
video,
it down
because it's a
for
really good guide of
for like
different ways
newer
that you can use
traders,
exit
for
strategies in
for
different
like
situations, different
beginner
trading styles.
traders. He like dumbs the information down, he slows it down. He's like the head trader at S&B Capital. But yeah, TH is like, I wonder if this guy actually trades. TH hates him. I like it. I love how TH just absolutely roasts Jeff Holden anytime he's on there. Do you like the other guy? Do you like the skinny guy, Gret? I think that's his name. I think his name's Gret. What's that guy's name? Where are they hiring? Oh shit, they are. Oh, you gotta go to New York City? Oh, they got a remote. Oh, no, but you gotta be remote from Miami? Oh, wait, remote trader. Man, I could possibly try and apply. Active news trader. Experienced equities trader. Quant portfolio manager. Where's certified degen role? I can apply for that one. Where's that? No, but we love S&B Capital. We love S&B Capital. I just feel like, you know, when you get to a little bit of a more advanced level, the slowness in their vocal patterns and the beginningness of their vocal patterns kind of puts me to sleep. So, I wish that they kind of talked faster. They kind of got to the juicier part and the meatier part quicker. But that's also part of the YouTube game. That's also part of the YouTube game where you gotta milk the content. You gotta make sure that you are able to bring people. What the hell? Why am I not at full cam? You got to make sure you can milk the camera time all the way till the end and make sure people are watching. The more view time, the more of this, the more of that, the better algorithm, and so on. So I understand it, but that's that. But anyways, hopefully you guys got some amazing trade ideas from all the opportunities that we looked at today. Hopefully you guys are ready for tomorrow. Airbnb, Upstart. What was the other one? I'm trying not to cheat. Airbnb, Upstart. God damn it, I have to cheat. Don't cheat, don't cheat, don't cheat, don't cheat, don't cheat. I'm gonna have to cheat. Airbnb, Upstart, and Hood. There you go. How can I forget Hood? The Prad to Nev. Come on, how can I forget Hood? So yeah, interested to see what those stocks do tomorrow. We'll be looking forward to trade them on my simulation account at the very least. But hopefully you guys are able to kill it on the markets tomorrow. Thanks, Brad. Tomorrow we'll see if the market. Your message got hidden a little bit with that stupid emoji. Let me see if I can find it on the other page. What do you say? We will see if the market can spring back. If not, then yeah, we probably are looking a little bit scary on the market. Are we not, sir? We're pretty worried. But we'll wait for that tomorrow. We'll wait for that tomorrow. No fear for now. We'll just get ready for tomorrow with hope and dreams, and see what happens tomorrow. Thanks for all the newcomers. Thank you for Think with Bookmap for kind of promoting this channel. Thank you for all the OGs, Dieter, TH, Momo, Blind Jedi, all the OGs who keep coming in to show me love, all the new people who showed up today to hit the like and subscribe. I hope you guys show up more often. We are streaming Monday through Thursday, 8 p.m. Eastern Standard Time, after the after hours with TraderPrad. Make sure you show up every single day, Monday to Thursday, 8 p.m. We also do a special Sunday night service at 6 p.m. Eastern Standard Time. So come check that one out on Sunday too. I wish you guys a wonderful day tomorrow. Have an even better sleep. Make sure you wake up in time and slap the markets. I will see you guys tomorrow at 8 o'clock for another episode of After the After Hours with TraderPrad. Have a great night, ladies and gentlemen. Adios. Wait, before I leave, I need to... Lo-fi girl. Where is it? Okay, anyways. Go to something, Prad. Just go to something. Where's Lo-fi girl? There we go. Okay, guys. Good night. Peace.